Good morning, August 16th. We're going to be streaming stocks, options, and futures trading today. We had a good morning so far and a good evening last night. Make sure you're well rested, ready for today. We're going to be watching the SPY, watching TTOOs, still on a rip. And that on our radar. BBBYQ, GME. And we'll be trading stocks, options, futures today. Continuing with the SPY dailies, small account challenge. I need to start doing a video on that. Got some swing trades. Market is it's right on that support. So I think today we'll know if we're going to break out of it to the downside or if we're bouncing back up in this range. We do have FOMC at 2 o'clock. So that could definitely be a catalyst one way or the other. And yeah, thanks for joining here. Thanks for the support. Sub up, like up, comment down. Happy money sticks around. GNS is down 5. I think TTOO is probably one of the biggest gappers on our list. You can follow us on Twitter also at Happy Money YT, and our Discord I'll pin in the chat right now. My eye has gotten worse, unfortunately. So having to try and keep it closed. So yeah, not sure how active I'll be able to be. I have to take some breaks. There's our Discord. Morning Poison. Is it buy set at 115? I don't know. I don't know. I think 115 could hit. Yeah, I want to see it find support. Just have to figure out if it's still an uptrend after it, you know, when it's coming down. If it starts to show some upward momentum, that's probably when I'll be picking it back up instead of just dip buying necessarily. TTO, I don't know what's going on with it. They have FDA approval coming today. I really don't understand. I haven't looked into what's going on with TTOO. Don't announce it. So this run-up has been in anticipation for an FDA approval. And you're wondering if it's a sell the news type of thing? Yeah, hard to answer that one. Usually biotechs and stuff is healthcare equipment. Usually they might get a little run up into an approval. This is much more than little though. So if they get approved, they almost always go crazy to the upside. So it's hard to know on this one since it's had such a rally already. If it is waiting for some approval, it'll sell off or continue to rally. What price after the FDA? I don't know. I'm not even sure what you're asking. What price you should exit? Just look at the charts. It broke a pretty big resistance yesterday, 54 cents. Now with the gap up, what is it, 66 cents up here? We got gap fills. They don't have a whole lot of resistance until that support up here. Go around here. Hit $1. And a gap fill there too. But if there is a FDA approval coming out, that's definitely, like you mentioned, a catalyst. You dump it or rip it. Excuse me. Morning, Guts. About 7 minutes to the bell. Lies down a little bit. Looked like I got hit in the eye. Pretty bad. KBNT's up a little bit pre-market. Was eBet gapping up? What? Bet. It's crazy, man. 72%. Yeah, all this volume on here, nothing happens. Until something does. Guess yesterday was an engulfing candle. Shoot. Missed that little nugget. We were watching it some yesterday. We've just seen these big volume moves and charts never looked good. Suppose by end of day it did make that engulfing candle. Even after hours. Oh well. Maybe grab some today. If there's any catalyst for this though. Massive volume though. Free float's 130 million. Traded $500 million the other day. Quarterly report? They have earnings? Quarterly report. Excuse me. Get pull back to this support right here. This is what originally got me into Mullen, just all that volume. Mullen's looked like it's actually starting to flatten out also. That support. Morning, Christopher. Yep, you got increased volume and an engulfing candle. That's all you got. Unpredictable today. Well, we're at the lows, so maybe a little bounce and see if it's little enough and we flush through the lows and break out of this channel we've been in for like a month. Or that bounce continues and this is a great long. Blocked him. I don't know why you're seeing his chat. And there's your bell. I might look for a dip buy here on eBet. See if we get some profit takers this morning. I like a support of 5 cents. Buy ripping up there. GNS popping up there a little bit. It's down 2%. Buy just wicked up to VWAP. Me's flat. Barbecue's flat. TTOO's up 10. eBet's coming down a little bit. Yeah, sure enough, HKD did pop up. No, JH dip bought HKD yesterday. So what? I haven't seen it break that level. I think ever. 650. It's been pinned on. Right back up there. S&P's gapped up. Wheels up is gapped up. Hey Julian. I'm doing alright. My eye gotten a lot worse. So I have to be chill. Rest it. Maybe some. I don't know. I don't know if something like, I don't know, it's weird. Something's in there or scratched or it's infected or something. Pretty swollen. That looks like I got hit in the eye. But thankfully it doesn't really hurt unless I can close it and open it, I guess. Anyways. Looking for an entry maybe on eBay. First down 3.5. Still kind of holding that level though. BBNT down 4.5. Quite illiquid. If it doesn't hold that level, we'll look for another spot down here to maybe pick some up. 50 cents. Can't fill not until 40 something on it. Got RXT up. Ops is up. S&P just got halted. Am I above VWAP now? Little rip on SPY. Barbecue's down 3.5. GME's down 0.5. What's 660 jacks? Julian, this is Weeble you're looking at. By ripping there. I got those calls yesterday that I'm way underwater on now. Had that dump into close and then a gap down. Still looking for an exit on them. Still down 60% though. Well, there's your green candle. $25% on up. RAD's pretty flat. Pretty much giving up all its gains. Look at the SPY go. It's down 1.8. So on the small account, on the day trades for SPY, look at that green candle, that's crazy. I've been doing like 10% of the account value per trade. But I'm trying to trade less. I'm thinking about doing a larger amount per trade. I only can have a few trades. Kind of a sideways way of trading less, just trading bigger. Neg died also. If you get a bounce on the support, you never come back down here, Neg. I filled that gap yet? Oh yeah. Excuse me. RXT's up there. Any bets below VWAP? Still ripping. Barbecue down 1.5. GNS down 1.4. Might be holding a good level though. What we got going on? RAD. Ish. We got one more support here on Dish. Hopefully it holds that one. That little trend line. 433 puts. Or 33? Oh. I guess you're expecting to break out to the downside. Yeah, could still happen. FOMC today still at 2. So could set up a strangle or something for that. Not sure this rally is over yet. Let's see, pre-market high. At least. Maybe even higher. That's coming down a little bit. KVNT back up 3.6. Thicker made new lows. Down 7. No buying support yet. RP down 1.5. Sticky weed fingers. 443. It'll move back to VWAP. You should make some money on those maybe. Not much of a pullback. TTOO up 6 still. SPY almost a new high. There's new high on SPY. There's a little breakout on SPY. GME is flat. Barbecue selling off. It's at 2080. Down 5%. Got that hearing today. Is that a 2? Got tops up here at 8.2%. Oh, what? Tops has had a nice sustained rally. Pretty good looking. So inverse head and shoulders there, all smooth. Eye still ripping. HE's up 3%. I'm waiting until XDivvy on this stock. Play with it. There's a first red candle on the 5-minute on SPY. Wow. 5% on Hawaiian. Wow. Oh, what? KBNT has earnings today? Where are we at on that one, Weeble? Alright, SPY's coming down, test the WAP. Iron T's up 20%. Up's 22. I got an engulfing candle there on the 5-minute. Back to VWAP. Then you got maybe a head and shoulders here too. See what kind of bounce we get on VWAP. And back to VWAP looking for trades. Trading around VWAP. You bet, little bounce there above VWAP now. Bet's popping up there. Get a retrace. Very much. We played on the breakout. I don't know if I have the stamina to be playing EBET on a breakout. There's a little head and shoulders there, and we have an engulfing candle. Our hang up now is VWAP. Up on 10 o'clock. FOMC today at 2. I think we had some data. We have data at 10. 9:15 we had some data. That was it. Barbecue Flushy down 6% now. GameStop's flat. Fish down 2-3. RAD's a little green. Keep an eye on eBay because I wanted an entry, but we'll see. I forgot which way to go on SPY here, honestly. I went to the south side. I actually got 0 days this time. I didn't get tomorrow's. Look at you! Too bad. Excuse me. Testing the highs there. Highs just below VWAP. Open this engulfing candle and head and shoulders plays out for a retest of the lows today. I'm gonna hold on to my calls from I got yesterday. Not gonna dump those yet. I'd even wait till 2. I mean, honestly, with FOMC. Yeah, there's the breakout on EBET if you want to play the breakout. Just not sharp enough today for that. Testing the pre-market high at least. Stocks are barely moving. A little more fleshy. There you go. EBET, pre-market high, made it. Too high there on EBET. Past pre-market. I put levels to the upside. I mean, this thing been sold off so much for so long. I don't even know why it's ripping. Maybe it's about to go get delisted or something. Looks like to do that. BBIG. That was jacked up. 85 cents. Or is that 8? No, 8.5 cents. Be resistance on EBET. And then what is that? 10 cents. Area in here. 10 cents. Closing a couple puts there. EBET, look at you, 8 cents. I don't know why, I just wanted to close some. Moving pretty slow. Top's up 10. Hawaiian's up 7.5 now. I wanted to mess with it, but that X divvy. I don't know how it's gonna respond after all this. Barbecued at 20 cents, 20.30. Down almost 7%. Got like 17.50, 18 cents next. GME is down at the lows there. See if it breaks that support, that $19. RAD's down a little bit. at 95%. We can just rip 50%. I think so. Alright, I'm out of rest those puts. Look to reload, maybe we'll see. I didn't have a great entry, so I was just too close to my price. I didn't get it on that first red candle. Didn't grab it on the engulfing. I wanted more confirmation. Or break of the neckline is where I jumped in. Back to VWAP with SPY. I'll be patient on this next trade. Could be setting up inverse head and shoulders here too, with a head and a shoulder. A shoulder over here. Why I kept my calls. Might not make an inverse cup here. Back above VWAP now. The 100% on eBet. Excuse me. Here we go. eBet broke it. 113%. Yeah, I like can't even see that well. Can't trade that. Ooh, got coconut oil over my eye. Moving up a bit. 120% on eBet. Oh, halt up there. I think it's gonna get halted. Ooh. I retesting the high of the day, maybe there. I'm in with some calls. Not great risk reward with high of the day looming. Hopeful for a breakout. Falling apart over here. Calls didn't work out. Hawaiian's up 11%. Yep. Fell off there on EBIT, back to VWAP. It's volatile. Barbecue bouncing up to VWAP. Down 4.8. GME's down 1.3. Yeah, new low there on GME. Ops is up 8. Yeah, EBIT best in VWAP again. Eyes climbing up here a bit. See what happens if we get high day. Double top, or if we break. They could be kind of slow and choppy also. FOMC at 2. Need to be careful of that. %, there on Hawaiian. AMC doing down 1.7. There's SPY moving up. Taking a little profits here. At high a day. Having to close one eye is crazy. See those overnight calls. They're still doing good. They're down 57%. If we get to move up to 445, 30 or 40, hopeful that they're maybe break even. I can get out unscathed. Up these Carvana puts. Big spread. Neg. Neg. Suck. So do you, RAD. Both suck. Dish down 3 1/4. That's not good. Last stop here, Dish. Make it count. I missed an exit there on some of these contracts. my peripheral. I want to see 2 screens at a time now. Yeah, I'm exiting some more. Out of the rest. You bet, consolidating up here. I'll hold on to these other calls though. Just wrapping and chopping and ugly. Well, eBet's consolidating nicely up here. 100%. Figure out if ABNT actually has earnings today. Real? I don't know when it's going to be. What's up with all these companies? Don't know when their earnings are. It's the sketchiest ones, like TUP. TUP's down 3. Down 1.25. What a chop fest. Liquor House is down 15. We suck again. I am a long-term holder of Liquor House. Me and Josh are gonna go far. MC's down 2.7. It's back to VWAP. Excuse me. TTOO is going again. Going down again. Holy smokes. TTOO down 20%. Sell off. Sell off, sell out. Sell out, sell off. GNS is down 12. There's a gap fill at 120. They have a share offering or something? Pretty large sell-off. Accidentally clicked it, but I wanted it meant to be. Got some puts there. I was waiting for an entry, but my finger had other ideas. Too excited. What's going on here? Not seen any news on TTOO. GME's kind of selling off there. It's down 1.6. Did break the levels from before. Hasn't broken $19 yet. That's next, and then he's no better than messing around VWAP. And I think $18. See if we still end up making this kind of inverse cup here today. Lies below VWAP now. MACD still bullish. Let's see without extended hours. Yeah, still bullish. There you go, SPY. Let's let him go a little bit. Hawaiian's up 13. Okay. Held a lot of restraint yesterday. Not playing this because that X divvy. Barbecue back to VWAP down 4%. RAD's down 2. NT's flat. Liquor House is down to casual 16. Come on, boy. Don't chop me back to bed. I'll do it. GNS hold? I don't know. Down 10.25, so looking probably for a gap fill here at 121. And then see if we get some kind of bounce on this trend line. That was the trajectory we held before. Started getting crazy. We were just bull flagging. What are you doing? A little fleshy poo. Hawaiian 14%. I don't know. I didn't see any news on GNS. Check. And they've got their dividend coming up. You guys are crazy. It's down 12%. This move has been massive. It needs to have pullbacks. That's just the way it goes. Big move up, you get big move down. Alright, I'm out of these puts. I don't like them. Alright, wait. Only 10:30. I'm gonna wait. We'll see a bigger move for the day. Why is that way up there? What the heck? Oh, now you're gonna flush. Freaking jerk. 1 minute of patience. There's the move I was trying to get. There it is. You're welcome. There's a... Oh, right back up. So 50% retracement would be about that $1.12, $1.11. Also coincides with the support we've had and potentially this trend line. EBET consolidating well up here. But see if there's news. Not seeing any news on GNS. Or TTOO. TTOO looks pretty aggressive. That looks more news driven. Almost fully filled that gap. A bounce there. TTOO. 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 Bouncer back to VWAP. Wine almost 14. AMC's down 4.3. Tesla. It's actually kind of building a little bull flag here. Pretty wide range. As well as, I mean, we're at the bottom of the range here on the longer term, longer time frame. That volume on up today is crazy. Look at this. 10 million already today. That dwarfs all the other days, and it's only 1040. They had news. What did I read about their news? Wheels Up lands 500 million rescue that puts Delta investors in control. Huh. Avoids bankruptcy at the price of massive dilution. Sell. Bum, bum, bum. Sorry, I'll check GNS more. I'm probably not going to play eBet. I'm just enjoying watching it, I guess. I went long. Go long. There you go. There's a little movement, a little action. You can actually break out here. Not toy around. Avoiding. My eye's gonna be sore just from trying to keep my eye closed. I do need like a patch. It's not something I usually keep in my medicine closet. GNS down 12. 12er. Still has a little ways to go. Got $1.20 for the gap fill. Support line. Keep an eye on it. Let me know once that gap's filled. GME bounced right on 1901. If that's gonna hold. Ooh, I don't feel too good. Barbecue down to 7.3. Tops up 10. Dude, tops chart never it's been good for like a week. Just steady climb. Today's a breakout. Actually probably a good day to even grab it on the breakout. Wait a minute. Back to VWAP. Down 7. Just down 10.5. Okay, I'm out of those calls. I wait. The Larry Chan tweet. You share it? Don't ever buy a stock just because of its ticker being cheap. The price, it means nothing.
And more, I'd say, intimate ways as far as AI goes.
Yeah, right. It's a little bit less of the like pure productivity, Excel and robotic replacement, more a little personal advice. I don't know. All right. Thanks, Jenny. I guess they told us that the bots are going to be our personal advisors, but I don't know about the relationship advice. It's a robot. What kind of relationships has it been in? All right, let's bring in George Till, Scott Durfee, our team this morning to get a little market chat here. What do you think, Scott? You going to a robot for personal advice?
Not on your life, brother. I think that's hilarious, and I don't want to get us off track. But if you think about it, if you go to a robot for a relationship advice, some of the relationship advice that's most important is the empathetic component that can come to you. So no robot going to give you that.
Right? I don't know. Because they're going to have to program it off of something. What kind of person are they going to... I mean, I guess if they took, like, all of the psychotherapists and, actual folks who are professionals in that realm and, like, took all their information and tried to put it into a robot, then, like, maybe okay, I guess, if it, like, comes from an academic perspective, possibly. But I don't know. Right now, it seems like generally our robot trade has also kind of faded a little bit in this market because we've generally been soft. And, George, we've been talking this morning that we're kind of looking for a hero. And a lot of folks think NVIDIA is going to be this next week to revive the market. I mean, what do you think? Has that whole trade connected to this notion of AI already done enough? Can it possibly deliver as big of a surprise as it did last time?
I think it's possible. I think if you consider the movement this year, it's rather aggressive. The other thing is, look at the market capitalization of NVIDIA. I mean, over $1 trillion. They don't have, I suggest, that daily use ecosystem that companies like Apple and Google have, or even Microsoft. So, what can make the case that maybe it shouldn't be valued at $1 trillion? Others can make the case that it should be double from here. So I think if they do report a solid number, if the stock actually gaps higher, that will be a revival of the correction we're in. I spoke about this a few weeks ago, saying how the sentiment was very bullish. And so when the sentiment is extremely bullish, you have to take the contrarian trade. So we're in a correction. Look at the NASDAQ, just give or take, it's around 6% off the highs, S&P around 3.5%, so it's a mild correction. There is something that is needed to revive this market out of this correction. It could be NVIDIA. Can't say that it's going to be the case, but there is some concerns out there from a macro-centric standpoint, with interest rates rising in the United States and China's economy soft. They actually have to lower rates, and if they do that, they actually also have to constrain capital flight or effectively reduced the value of their currency, and you can see the yuan is down to essentially significant lows, respectively, and that's to be expected considering the rate hikes that we've seen in the United States. So there's a lot of pressure on China's economy because of what the Fed is doing, and I think that's also manifesting into what we're seeing in the markets as well. So a combination of maybe the extreme trades that were put in place, especially in the tech and AI space this year, also with the weakness in China, the dollar seems to be, maybe recovering. Interest rates, at least in the 10-year, hitting that, 4.25% area. So there's a lot of moving parts that are going against the market, at least in the short term. But I suggest, again, even if the Fed does raise rates, the elements of fiscal transfers, I think, are really helping this market this year. It's not about the monetary tightness, it's about the fiscal ease that's really in the backdrop, because if you look at the fiscal deficits, the percentage of GDP, they're actually rising to 6% in the next 4 quarters, and that's higher than last year at 5.5%. But nonetheless, with our economy expanding, so has the budget deficits. And so with that said, that's actually an injection in the economy, and I think that's one of the reasons why this market has been higher this year.
Okay. Dollar slipping a little bit today, but not too far. It just kind of seems like when it comes to the macro message, it's pretty persistent on telling us that inflation is not a problem that we left behind last year, Scott.
Yeah, that's right. And George's making some great points. This stuff's not going to all wash out in a minute. We know that. We know that from the day one. But we're starting to see now some routine cyclical type of behaviors take place in the market. And we're starting to see a couple of things that, we maybe didn't expect to see that are also affecting what's going on here. For example, we're seeing some headwinds in the financials as Fitch recently dropped a credit rating or lowered their credit rating, along with Moody's, that they downgraded 10 banks, as well as putting other, institutions on kind of a watch list. And so, we have very careful scrutiny around what's happening in some of the sectors. And, we have a lot of data, a lot of news coming out. We have housing data coming out yesterday. We have, a lot of unemployment stuff coming up. We have the Fed speak this afternoon. So, as the market just kind of rolls through and goes through the cycles and the things that, for example, like what George just talked about, as it goes through those things, we will have to, as traders, the investors might be just a slight difference because, a more long-term outlook may be different. But if we're traders and we're looking at what to do in short or intermediate term trends here, we better be nimble, because there will be some effects. We're starting to see that. We're continuing to see that, I should say. And we probably will continue to see that until all of this gets ironed out.
Yeah, all right. And unfortunately, this week, we don't have any gangbusters data to add into the recipe and the cocktail. But tomorrow, at least, we'll get to look at jobless claims, see how the market reacts, and tonight some earnings tomorrow, too. George, Cisco going to save this market real fast?
I don't know if it'll save the market overall, OJ. I think at the end of the day, we're starting to see some of the manifestation of hardware sales improving, especially at the enterprise level. Cisco is certainly a global barometer for network gear, but I'm not sure if that's going to move the needle, because I think at the end of the day we're still in this correction. So I agree with Scott. It's good to be tactical and nimble at this point in time.
All right, thank you very much, guys. Good combo. Nice cap to the show. George Till, Scott Durfee, I'm Oliver Rennick. Thank you for joining Morning Trade Live. Trading 360 with Nicole Petalides is up next. I'll see you this afternoon.
Many option traders
They lowered their fiscal year guidance, and they also reported less revenue than had been anticipated. So we did see that earnings came in around $1.80 a share. That was a nice beat versus the expectations, but sales fell 5% in the second quarter and also did pretty much miss the mark by a sizable margin, coming in around $24.8 billion versus over $25 billion that had been expected. We did see weak sales prompting the company to then lower their guidance for the rest of the year, now calling for full year profits between $7 and $8, which was below their prior estimates. For the third quarter, they also see adjusted earnings ranging between $1.20 to $1.60 a share, also below estimates. CEO Brian Cornell said, given the current consumer and economic backdrop, they've adjusted their guidance for the remainder of this year, consistent with a cautious planning approach that has served us so well during the first half of this year. Inventory levels were also
GME broke down
about 17%,
broke that 19 level to 1887.
Gross margins were, I would say, arguably the brightest spot of this report. They did improve to 27% from around 21.5% a year ago, even though they came under pressure from increased inventory loss.
For 18, even on it.
And some organized crime in the past quarter, which is, I mean, just really sad. We also did see the Pride controversy reach their price, dragging down sales and their foot traffic, according to management. So a lot of the headwinds that just management discussed had been, I think, expected of Target, but I wouldn't say this is a reason to rally. I mean, I am surprised by the nice move up to the upside today. I think they needed it. Shares are still down 12% this year. I just think that it wasn't necessarily one that says, you know, Target's in the all clear now for the rest of the year.
Yeah, I mean, the one, you know, you pointed out pros and cons there, and I mean, some good margins, which was good news, but there's concern about inventories, right? I mean, they are projecting some sales. They better hope to sell the inventory that they have, as you noted, lowering the guidance. I saw that this morning. Let's turn our attention over to Intel, and this was a big deal now getting called off. Tell us more about this one.
Right, so we're seeing Tower Semiconductor today sell off after Intel did scrape its more than $5 billion offer to buy the company, which is an Israeli chip maker. Now, we did see regulators fail to approve the deal in time, which was a lot of the factoring behind the deal not going through, which is the latest sign of fallout we're seeing between the U.S. and China as we battle over technology here. Intel and Tower did say on Wednesday they would walk away from the proposed deal after failing to win this regulatory approval. Neither company did directly mention China, but Intel had said the deal might fall through if regulatory approval wasn't received by this Tuesday deadline. China's State Administration for Market Regulation did not respond to any of the reports and did not sign off on the deal. The demise of the deal, though, does come as we have seen a lot of these broad pressures here to then curb some of the efforts between China as well as the U.S. to help these companies operate as seamlessly as possible, but it doesn't seem like today's news is signaling that that's necessarily going to be fixed anytime soon. Antitrust reviews have been a huge part of Beijing's toolkit for hitting back at the U.S., with regulators either slow walking or failing to approve several of these deals that involve American companies within their jurisdiction. So this is a really interesting story today. Obviously, we are seeing the fact that these names are lower on the session. Intel is down only about 1.5%, but not necessarily what you want to see with companies that have exposure to China to the extent that Intel does. I mean, Micron's another one with sizable China exposure. I think something to keep on our radar for now the midterm.
Yeah, without a doubt. Two big names to watch. Thank you very much. Jenny Horn, appreciate it, markets correspondent. Let's get some insights in the news shaping the markets. For that, we welcome in Laurent Laskowski, Director and Equity Derivatives Strategist at Mizuho. Thank you so much for being with us. We keep getting negative news out of China. Yesterday, we got disappointing data. Today, I saw home prices fell for the first time in a long time. We have a real estate issue happening there, property developer again. And here at home, we're trying to give it a go, but how does it all intertwine?
Right. So look, we're looking at the options market here, and at where we are today versus where we were in the beginning of the year, and essentially this enormous change of volatility that we've seen. Right, you were talking about the VIX at 16 or so, and last year 2022 we were at VIX in the mid 20s, and with this volatility going down, we've seen a lot of systematic players, systematic funds redeploying capital. The less risk there is, the more you can redeploy capital in the market. This is the case particularly with, say, volatility controlled funds that reallocate to equities as volatility comes down. And going from volatility of 2022, VIX 2022 to VIX at 12 or so, and towards the end of the first half, a lot of these systematic funds have rescaled their equity positioning in the market, but volatility can only go so low, and at this juncture, we believe that the market is particularly vulnerable to a volatility shock. So, interestingly enough, since May of 2023, we've only had 2 days. Since May 23rd, excuse me, we've only had 2 days of S&P 500 being down 1% or more, and one was yesterday, and the other one needed to see the Fitch downgrade of the U.S. Treasuries, essentially. So this is a very, very high bar to see, the market pull back. But we believe that here, as we're going into this August options expiration, we're at risk of seeing a little bit more volatility. And with the volatility that we've seen a little bit in the past, we believe that it's time to really consider hedges.
Okay, so with that being said, because you have this options expiration happening, and I agree with you. I mean, I think a lot of people play just on the volatility as itself. I mean, when it was at 12 or 13, they were buying it, and then they were selling it at 16, 17, a year or two ago. I remember everybody, that was like the easiest trade on Wall Street, I think. But at this point now, with the questions of the Fed and potential recession, how would you describe the mood when you're trying to advise clients and what to do? How do you describe how you're going to do this and why?
Sure. So I think the mood when it comes to hedging and particularly just buying options is a frustrating one. Essentially, you would have been a lot better off selling options than buying them so far this year, right? I mean, like I mentioned, since May 23rd, we've had only 3 days of S&P 500 down 1%. So we got to be really careful here about the amount of money that we spend in our premium when purchasing options. And there are really two possible things that we would look at doing. Of course, number one is spreading. Rather than just buying a put, buy a put spread. Or better yet, maybe buy a put butterfly spread, targeting a narrower and shallower pullback. Another way to do this, particularly after the highs that we've, the highs that we're seeing right now, is looking to sell an upside call, potentially capping some upside to gain immediate downside exposure through a put spread. That's something that could be particularly interesting in semiconductors ahead of, say, NVIDIA reporting next week.
Yeah. I mean, this August expiration, you noted, is on the smaller side, and the current setup that is in place increases short-term downside risk for equities. Give us some examples here as I look at some of the national expiring, puts and calls that are happening. Give me some examples about how you would tell somebody to set this up.
Yeah, certainly. So again, right, like I said before, it's been really difficult to hedge and to buy options. So really, put spreads going into the end of the week, maybe going into September, given the weak seasonality of August and September in equities and the spikes in VIX that we've seen over these 2 months. So overall, put spread on indices at the very least, and potentially financing that by selling calls to the upside. Yeah, and it's a different market now, as you noted. I mean, different than what we saw in June and July, coming off some stronger equities. Where now, we're seeing that weakness sort of creeping in. As you said, frustrating. Thank you so much, Laurent Laskowski of Mizuho Americas. Thank you so much. Good to see you. Thank you. Plenty more to come right here on Trading 360. Our 360 Spotlight is focused on AI. We'll explain why your preconceived notions of the technology may be wrong. Our disruptor, Salesforce, company is down more than 10% over the last month, and Mizuho just lowered the price target. George Sillis will have all the details and an example trade for us later. And Tapestry has dropped more than 10% in the last week since it announced that deal to acquire Capri.
We're forecasting and looking at what happens here for these quarterly earnings for Tapestry in today's 360 round. And up next, it's the big three. 3 stocks, 3 charts, 3 trades. Ben Lichtenstein takes us through the technicals. John Kaufman takes us through the trades for GM, the home builder ETF, and Starbucks. That's next here on Trading 360.
Hey, yeah, I'm here. Sorry. I'm a little out of it today. What did Larry say? I don't know. Did you guys share it on Discord? Bye, back to VWAP. Let's see, I've got a bot in here. So I got a couple puts at the top there. I thought I'd be trying to be smart instead of trying to play the breakout. If we're chopping in a range, just get puts at the highs and calls at the lows. A little profit there, VWAP. See if we kind of respect this trend, or if we get down to the lows here, or even the low of the day. Alright, we'll read what Larry Chang said here. Oh, Jade shared something about AMTD. AMTD Digital expects to achieve over 50% increase in net profit. Interesting. eBet is just taking a bump now. Hawaii's up 13. RAD's down 2.6. Saw another one here. Excuse me. Okay. Larry Chang tweeted, "For the sake of clarity, following Solutions investment in Grove Collaborative this week. I am involved with only 2 public companies, GME and Grove. As a board member of both companies, I have no involvement with any other public companies, including BBY or BYQ." Oh, that was nice of him. That was nice of him to mention that. Larry confirmed he's not in barbecue. AMC, stupid move to the upside? Maybe. There is a chance. Give me 1890. Buy back to VWAP. There it goes. Maybe. Someone is being clear about their stance. Yeah, that is nice. Nice clarity. Maybe I'll tweet that to Ryan Cohen and ask him, what say you? Seems like a stupid question when had public documents showing that he's sold his position. But I guess there's no stupid questions. You have people coming up with stupid answers. Questions that weren't being asked. GNS down 12.6. Gap's almost filled. And looking at that 50% retracement. 8/17, is that the date? Oh yeah, the shareholder meeting's tomorrow or whatever. We're gonna hear from the CEO. So that could be a catalyst. See, this is what I should know with RAD. Made that engulfing candle. But definitely when it broke the bull flag. Pretty good sign there. Pretty good sign there. Yep. Barbecue's at 2050, it's down 6%. Got, I think there's a court hearing today. Check out. KBNT. Sounds like a radio station. Tuned into KBNT. Cool waves. $106.2. Well, space had a little bounce there. I hit 2620. Yeah, I did not like seeing it break the support yesterday. That was not my favorite. I don't like how Run broke that trend line either. I think it's headed back to 14.5. Hopefully it's fine support there. And charge point selling off as well. No pre-earnings run up. Looking for this one to find support. 722. No idea what RAD's doing. Last retracements 1792. Lies below VWAP there. S&MP is halted. She is halted. Oh snap, to the downside? What the heck? Oh, there's news. Biden to survey Maui wildfire destruction. Meet survivors. Dang. That's crazy. Volatility still. Halted to the downside, that's wild.
Ben, what do you think about the chart?
Well, I think that unfortunately we're still in a bit of a bull trend, so I don't subscribe to the bearish narrative that Don's putting out there. But I do like the idea that he's giving himself some time here, because if we do break down below 82, we could see some energy, that's for sure. But I want to begin first and foremost with the rally. We've seen the bullish pattern, high conviction on the left side of your screen, sideways consolidation throughout the bulk of after we rallied up to 85. We found rally. We've been consolidating again around this $84 level. So you see the conviction. We're talking about into the beginning of July, up into the middle of last month, and then you can see a little bit more rotational and overlapping horizontal type pattern playing out. But I also want to direct your attention to the left side of your screen here, because even throughout that run up we saw, what is it, from 77 up to, we'll call it 83, you can see that this pattern played out, high conviction, sideways consolidation multiple times, 78, 79.50, 81. Each one of these times you can see a high conviction vertical phase transitioning into a horizontal phase, and this is what I look for, because it's wash, rinse, repeat when you're talking price activity, and it helps provide a lot of rhyme and reason. In this instance, value's moving higher. We've got a trend environment to the upside, but taking a look here at the longer term, you're going to see that's just a small portion. Here it is, that rally up that we looked at, sideways consolidation around 84, small portion of the run up we've been seeing, 62, 69, 79, the staircase type pattern playing out. So again, I think Don's onto something. If we were to break down, we could see some energy below 82, but there's no indication that we've rejected this trend environment to the upside, holding above the 50, holding above the 200. I will give Don this, the one crack in the dam, look at the RSI, it's actually taking out recent lows that we saw back in July, so maybe price has a little room to go to the downside here, but 82 is going to be a key level, and we're holding above that right now. Also holding above some key moving averages here. No indication we've rejected this trend environment, that the working assumption that value is moving higher is an invalid one.
Okay, so Don, I mean, he really talked about everything going to the upside. He tossed you a little bone with the RSI. Don, Ben, thank you always for that. All the great charts. And Don Kaufman, final thoughts here on Starbucks.
Oh, yeah. So jumping over to Starbucks right now, in terms of Starbucks, looking for a bearish trade. There's a big reactionary high around the 115 handle. We've been in some sell side activity ever since. I think that the business continues to kind of deteriorate. Changing CEOs, had a mild bump for a not so considerable period of time. Nevertheless, Starbucks again continues to see some sell side activity under the 100 level. For that, I'm going out to the Nove 17 expiration. So giving myself a little bit of duration. I'm going to be buying a 95 put, selling an 85 put. Again, I like to use spreads. I like to define my risk. It's a $10 wide spread done for a $1.80 debit. $1.80 debit on this one, but Ben, it's another bearish trade. But come on, you got to love the big reactionary high there at the 115 handle.
And you have till November 17th. Ben, thoughts on Starbucks?
Well, I do agree with where Don's coming from, and has been in that place for a while in terms of expecting this market to roll over at some point. I think that we're seeing a little bit of a levitation act when you're talking price in terms of the indices relative to rates in that environment. But this could go on for a while, and the rally we've been seeing in Starbucks has been very well-defined trend environment, much like what we were just talking about.
Is resumed.
HB. We're talking hourly 30-minute candles, I should say, 96, 98, 99.50, currently balancing around 101.50 and holding above this area, significant area around 99.50. So trend up on the more intermediate time frame, stepping away from that to the daily candles. You can see that that's playing out on the longer term as well. Now, Don, in terms of
this, there you go, GNS 50%,
a thread to hold on to in terms of the fact that we're stalling out.
You want to dip by it
around the daily. Around the pivot level of 102 right now, the middle of this zone, but still a trend up here in longer term areas of consolidation that continue
some stop losses got triggered there.
Look where we are. Again, possibly
Bounced pretty much right on that 50%
dam here. I'll
and
give
right
it
on
to
that
Don
trend.
Again, a breakdown below the 50-day moving average, but in this instance, we're not necessarily seeing RSI participate to the same extent to the downside below the 200 in Starbucks, something we haven't seen consistently for a while, that's for sure, but definitely at some point we're going to see a
little
correction
slow
here.
there.
Just not necessarily sure that the technical support that happening immediately.
All right, thank you, Ben. And Don, your thoughts here on Starbucks. Anything you want to add?
Yeah, no, Starbucks coming off the 115 level, looking like it's going to crack through 100. I mean, it's already, quote unquote, in corrective territory. It's more than a 10% decline. Quite frankly, there's also of what we term those magnificent seven and the marquee tech stocks that
You
are
guys dip by
also
that thing?
technically in corrective territory, including the likes of Microsoft. So at this point, look, we're just looking for the big punch to the downside in the S&Ps and some follow through sell side
A
activity
little head and shoulders here. I mean,
expressly
it's
in
just
the magnificent
choppy.
seven.
I think we'll
Right,
see maybe
thank you.
443
Great
though.
big three today. We had General Motors, the home builders, and Starbucks.
Maybe
Always
low of the
great. Love
day.
having you both on. Thank you very much. Really appreciate it.
We have a
Make it
smaller
very
position
good and
now.
special.
Yeah.
Don Kaufman and Ben Lichtenstein. Thank
Lichtenstein.
you. All right, coming up next, we're going to take a look at Tesla. Another price cut for the cars in China. We want to hear more about that. Kevin Green will take a closer look at that and some of the other companies and how they're feeling the weight of some of China's disappointing economic data that we've been seeing. It's all coming up next.
Yeah, I got back in. Dang. Alright, now I need to save the rest for afternoon trade. Got FOMC. GNS. Yeah, I think it triggered some stops there and just solid bounce. Nothing crazy yet, but I wasn't even paying attention. We're like right at VWAP. Bugger. VWAP trades. I like trading to VWAP. Trading away from it. Barbecue's down 6.7. If HE was halted, that was crazy. Nailed it. Nice, Christopher. Be patient on getting back in. You know how it is. If you have profits on something, don't be too quick to get back in. However, that does seem like a nice dip buy. If a dip buy is a good idea. There's a catalyst tomorrow, though, you have to remember, with his talk. George, is it George Hamilton? Having like some kind of shareholder meeting or something tomorrow. So, could be good, could be bad for the stock, I don't know. And then this is the next catalyst, 8/31 for ex-divvy date, I believe. The rally might continue until then, after tomorrow. I don't know when he's coming on. Probably check. 11:30, so EU close. What will SPY do without the weight of other markets? Continue its chop or take a direction? Where does she come from? Where does she go? Where are you going? SPY drops by. And I haven't even had any cold medicine. Well, MACD might be flipping bearish too. We might get a low of the day test. 4 hops. GME about to retest its low. It's down 2.5. 1881. That MACD flips. That hasn't been red all day on the 5-minute. Okay, let's see. You guys talking about on Discordian? Nova's finally moving? Yeah, Nova's up 67. Spy, chop suey. Effective VWAP. Come on. Can't be greedy today. Gotta be very concise with your profit taking. Not until we get a direction. Still early though. 11:30. Like to see this bearish MACD. Yes. You get a MACD crossover. Doesn't mean a whole lot with price action like this though. Got head and shoulders, inverse head and shoulders. Got everything going both ways. Volume. Yeah. Freaking mess, man. Alright, well, GNS bounced off that low. Got GME down 2.85, new low of the day on it. Barbecue down 6.8. Ripping now. I'm closing my puts. But VWAP, I had a nice trade from here down, and I squandered it. I'm trying to get back in the middle of the chop, which I know better. And then that little thing just shook me out. Yep. Bet starting to consolidate here on the right shoulder. Whew. RAD's down 3. Seems like a lot of the stocks on my watch list are down today. I'm not sure what holding up the SPY. Maybe the mega cap still, I guess. There's SPY. There it comes down. Oh, oh, never mind.
To that, but let me respond to Tesla first off. You know, at Tesla, the most frequent automobile accident involving Teslas is rear-end collisions, and the reason is these self-driving cars cannot tell the difference between a tumbleweed in the road and a cinder block in the road. So you and I would drive over a tumbleweed, but the computer cannot do that, and so it slams on its brakes, hence you have a lot of rear end collisions. That gives you a hint of how far behind we are. So for Musk to say that we're on the brink of having self-driving cars throughout the country, it's just an insane statement.
4%.
I mean, it's not even close at this point, because we don't know how humans think. We don't know how I can tell the difference between a tumbleweed and a cinder block, and let alone how I could tell a computer to do that. So companies like Tesla, they do
down
have
almost
a lot
3
of dependency on companies like NVIDIA. So this might sound contradictory. I'm saying we're far off from actually solving the true AI problem, but along the way, what we're doing is throwing massive computing power because we think that might solve the problem. So if you're going to go on that bandwagon, companies like NVIDIA, super microcomputers, they are the poster children for this phase that we're in the development of artificial intelligence. And so I am a holder of those two stocks. They're some of my top holdings. Even though I don't think in the long term it's the solution to artificial intelligence, but I will tell you, we have a heck of a way to go. And I would say for the next 5 years at least, people will be buying, manufacturers will be buying these graphics processing units till they can't breathe anymore. And that's the play that you can do for the next at least 5 years.
And Supermicro SMCI, right? You know, we really didn't talk too much about ChatGPT. Obviously, that's a big part of the story as well. But you hold, as you said, NVIDIA, SMCI. Thank you so much, Peter Anderson. Great to see you. Anderson Capital Management. Glad you're with us today. Thank you. Coming up next, the disruptors, and George Sillis is standing by. He's taking a closer look at Salesforce. Mizuho lowering the price target on this company. He'll have the details, an example trade, more right after this.
He's coming down a little bit. It's chopping its way back down here. See if we get a long. Getting a long here. Or if we make it all the way to the low of the day. It's coming down a little bit, getting to the low of this on a bull flag. You can make a inverse cup. Complete it. Everything's very calculated today, though. Market makers are just controlling, just eating up liquidity everywhere. Tight little range. Okay, there's your initial bounce off that low. Be patient, see if it's actually going to reverse here. GME is down 3. 1875. Barbecue down 6.3. Okay, not looking good. Not look good for the bounce. Looks like it's going to make that inverse cup. Finally. Finally.
Around 74% of sales, and that's generally, right in line with some of the legacy software companies, which this company is. But their net income margin is only about 1%. So this is a company that actually has a tremendous amount of room to expand its net income margin on a forward basis. And I think one of the hangups has been that Salesforce has essentially made a lot of acquisitions in the past, which they're trying to manifest into, of course, better earnings on a forward basis.
All right, thank you for all of that. I mean, basically, I saw a lot of quality comments in there. A lot of good news.
Yeah.
I know you had the price target cut, but as you noted, a lot of good things that are happening for this company. In the meantime, how would you go about an example trade now? It's already a winner, obviously. Year to date, hit a recent high, has had a recent pullback. Yeah. Your thoughts on an example trade?
Yeah, so if you notice, Nicole, in the last few weeks or so, we're changing strategies. We're actually selling premium because I think the market is in a correction. You have to be mindful of that. If you look at Salesforce, it peaked around 240 not too long ago in late July. So it's down about 13% from those highs. So what we can do is actually look at the stock recently. It's just been in sort of a tight trading range. 100-day moving average is where the stock price is sitting at right now. So what we can do in this case is simply put, sell a $200 September cash secured put. Now you could sell it for about $5 a share or $500 a contract. So by doing this, you're essentially creating a situation where you're willing and able to purchase the shares at 200 if it does hit that, and you're assigned the shares, but your break even is at 195. which altogether is another 7% decline. So if you're willing to, essentially put out some capital to put this trade on, your yield to strike is about 2.5% in 30 days, but you do have flexibility of about 7% to the downside before you're at risk of loss in this trade.
All right. Thank you so much, George Sillis, with the Disruptor every single day. Thank you for being with us. Appreciate it. Coming up next, we're going to take a look at Tapestry stock. Now, Tapestry has been dropping, right? Down more than 10% since that deal announcement to acquire Capri. I want to take a closer look at this deal and preview also the quarterly earnings that are due for Tapestry. Next on Trading 360.
When traders tell us how to make thinkers
GME down 3.6, 1863. I don't know if I want to play the long on the bounce, the potential for a handle, or play the short on the handle, because sometimes this is just ends up being a double bottom and then you just keep rallying. But I only have one trade left. Maybe I just wait. Maybe play the handle if that sets up. This should have been an easy short. I don't know how I let that shake me out. That was stupid. They were all red candles. Got it here on this head and shoulders. There's this wick right here. Brought it back up above VWAP. I'm like, oh boy. All these tall wicks. Yeah, 5 minutes hasn't had a green candle since 30 minutes ago. Barbecue down 7 1/4. Some stocks getting wrecked out there. Be down 3.9. Looks like it had a little volume and a wick almost back up to VWAP there. This is probably low enough for it to be the cup. maybe not.
Overall, so you're not really expecting much from this call tomorrow. And Tapestry has names like Kate Spade, Stuart Weitzman, Coach, for example. Tell me your thoughts. What do you expect tomorrow, David?
I think tomorrow it's not going to be a strong report. The company already basically announced that they're going to meet the expectations, which were only for about 2% sales growth. So that's what I'm looking for. Earnings of about 97 cents. I think we're going to see about 2% sales growth from Coach, which is nothing spectacular, certainly, but at least it's not a negative number like we've seen with some of Capri's brands. As far as divesting brands, I think it's possible that Tapestry will eventually sell Kate Spade and focus more on the two stronger handbag brands, Coach and Michael Kors. And then, perhaps Stuart Weitzman will be sold or shut down completely. I do think that Tapestry sees value in Jimmy Choo because it is a well-known luxury brand, and it's still relatively small. And so I think there is a lot of potential growth in Jimmy Choo over time.
Wow. I mean, imagine if they actually shut down or closed Stuart Weitzman altogether. That would probably ruffle a lot of feathers. Final thoughts here, Zach. I just want to know, are there other names that you just really love right now? You mentioned the hold here on this one. Do you have a strong buy on something else?
We do have a buy on Canada Goose, so ticker Goose. We think they've got a lot of potential out of China with the reopening and some of that international travel in Asia. That's kind of our thoughts. We think the U.S. for luxury brands is going to be kind of stale over the next 12 months.
And David, quick, I got 1 second left. Do you have a strong buy? Anything else you want to tell me about?
Right now, I would say that Macy's is maybe worth a look. I think it's quite cheap at the current price.
Okay. Good to see you both. Thank you very much. Thank you. Great conversation. David Swartz, Zach Wiring, thank you. And that's going to join
there you have it.
For us here on Trading 360. Join me later at 2 p.m. for the watch list. Fast Market is next.
We broke today's low of day. Oh, was that yesterday? Sorry. Today's and yesterday's, yeah. So there's your inverse cup. See if we build a handle. See what we got. I've got one trade left, so if we get a handle, I want to see a big old flush out of this channel. This 2-week long channel.
lag effect that's finally starting to take hold, where we're starting to see little cracks in as far as maybe the growth in the economy. But then you got the Atlanta Fed coming out raising Q3 expectations, a percentage every day, it seems like. So it seems like these forces are combating each other, but we've still had a pretty good run so far here in 2023.
There's lags in the higher interest rates, Tom, but there's also lags in the spending coming out of the administration. I read an article last week that the money from the CHIPS Act hasn't even begun to flow yet into these firms. Yeah. So think about that. All these labor negotiations, all these higher wages, what do you think that's all going to do to wages going forward? I mean, there's a lot of still inflationary pressure in this market, Tom, with a lot of employees getting big raises, and now UAW, they're coming up next. So, yeah, I think there's still upward pressure on wages and inflation in general. And the lags, the lags effect in interest rates are there too, but the spending, there's lags there too, Tom.
Kev, you brought up a good point, that UAW vote that's supposed to take place next week if they go on strike sometime in mid-September. And if you look at, if we can get a chart of maybe Ford and GM, 1-year charts, I mean, they're already expecting maybe a strike coming down the pike here at this point, because if you look at their price action over the last month, I mean, Ford alone is down about 10% in August. I mean, have they already priced that in, these stocks?
Well, it's interesting, Tom. They're one of two scenarios is going to play out. They're either going to strike, or Ford and GM and Stellantis, their expenses are going to spike higher. Either one is not very good for the price of these stocks. You saw them sell off last week. You saw UPS, kind of the delayed reaction. Everyone applauded, when UPS settled their strike with 340,000 employees, and it's just like going to a nice restaurant. All of a sudden, UPS got the bill for that, and the stock didn't like it. How much it's going to cost them. So people will applaud if these labor negotiations get settled, but all these companies, it's going to cost them more money. So, think companies like Disney's, company like GM, Ford, all these companies that are going through these labor negotiations with unions, the cost of living is going up for all of them, Tom.
Yeah, and that's a concern moving forward, because this administration seems like it's pro-union at this point.
Yes.
Wages continue to rise. If we get any cracks in the consumer, that's going to negatively affect maybe a big section of the economy when you look at, how much we rely on consumer spending at this point. But Kev, if you look at some of the data today, housing starts and permits up a little bit, kind of pushing back against that home builder sentiment number that we got yesterday, which fell to the 50 level from 56. So we're starting to see maybe the impact of home prices being at all-time highs, wages going up, supply chain issues still in there somewhat. But, affordability is going to be a real concern moving forward. But it seems like the inventory issue that we have kind of overrules all that, right?
Yeah, I looked at the housing starts and permits number. Nothing real alarming in the actual headline data. But if you saw, Tom, the revision to the starts number from last month, pretty significant downward revision in the housing starts number last month from 1.434 million to 1.39 million. So pretty significant. Yeah, you see it right there. Pretty big revision in that number there, Tom. So that was the only thing really caught my eye. The rest of the number came in pretty close to in line.
Kevin, if you look at the earnings here, Target, just yesterday ahead of this report, it seemed like expectations were so low. We were at 3-year lows in the stock yesterday. Is this almost a bit of, because the report, if you just look at it straightforward and the guidance moving forward, the shrinkage that they have from theft kind of came in line. I mean, this was a pretty dismal report, but is it just like a dead cat bounce for the stock at this point?
Below there on
Target's a pretty high quality company, Tom. But in the history of Target, this will go down as some pretty dark chapters in their history. Not only the shrinkage level, some of the political issues, the cultural wars that they got involved in, and their inability to manage their inventory properly and their margins that ensued from that miss in the discretionary inventories. You know, Target is a high-quality company that will eventually pull out of this, and I think you see a little bit of relief in today's trade. But, you know, boy, these will go down as some dark chapters in Target's history, that's for sure. I mean, inability to figure out and navigate the new world we find ourselves in.
Yeah, and it didn't seem like, it was pretty downbeat as far as, maybe the conference call goes here and the expectations from the CEO. But yeah, is this one of those, scenarios where, hey, this is a kind of a kitchen sink quarter where you think things can't get much worse than they are at this point right now for Target, and that's why you're seeing it jump here a little bit, but still off of those session highs?
Yeah, I think the fact that they had such a nice beat on the earnings per share really gave people a little bit of hope that possibly the worst is over. They said their inventories are getting better. The margins are improving, not to where they were, still not a blockbuster breakout quarter for them, or I think the stock would be higher. Remember, the stock traded as high as 139 in the after hours or early this morning when the number came out. So it's down pretty significantly off its highs pre-market, but still having a good day, up about 3%. That's a pretty solid relief rally there.
Yeah, and Kevin, if you look at yields right now, I kind of want to pivot over to that ahead of the Fed minutes that we're going to have this afternoon. You got that 10-year yield above 4.2%, trying to get back up to that 4.3% level that we hit about 10 months ago. Is that also a thorn in the side of markets right now because of rising interest rate environment? Dollar turned around, now positive at this point. So some headwinds here.
Oh yeah, barbecue flush too, 1921.
Yeah, the news flows on the strength of the U.S. economy, Tom, like we've been mentioning. You add all that up, there's just a constant flow of stronger than expected and strengthening U.S. economic data. Now that's a good thing for the U.S. economy. May not be a great thing for the stock market because you see yields are heavy here, or yields are higher, bonds and notes are heavy, Tom. So I think, I'm not sure. It's a great news for the overall U.S. economy, how resilient we are. The question is, what does that mean for Jerome Powell? What does that mean for stocks? Might not be, it might be a little bit too good for what Jerome Powell wants to see, Tom.
Kev, and looking forward to, the Fed minutes this afternoon, but at the same time, that's probably not going to be maybe a catalyst. We have seen the market move after the minutes, sometimes more than when the Fed actually comes out and hikes or, makes their decisions at this point. But next week, Jackson Hole, we remember what happened last year at Jackson Hole. Is that maybe a potential catalyst here for the markets?
August 25th, I mean, I imagine, they haven't really announced it yet, but I can't imagine a scenario where Jerome Powell doesn't speak at Jackson Hole. But, it's a high probability that he does, but we don't know for sure that he's even speaking there yet. I assume he will. And when he does he give another 8-minute tongue lashing to the markets? I don't know. I don't know. We'll see. That came out of nowhere a year ago, if you remember, Tom. We weren't expecting it. The markets weren't expecting it. The market sold off hard when he did that. We'll see if he does something in store again. But history tells me that he won't do that, right? Because that was kind of an outlier in his delivery mechanism to the markets. That was harsh that he came out with. Remember, it was only 8 minutes. It was less than expected. He was very stern to the markets, and the markets reacted very poorly. I do not expect him to do that again this year, mainly because he's had a year of raising interest rates, Tom. And like I said earlier in this discussion, the market thinks we're close or closer to being over with interest rate hikes.
Yeah, big down day last year when he gave his comments, that 8-minute speech. But this year, Kev, he is supposed to make comments on the topic of structural shifts in the global economy. So that could be a catalyst next week. That's going to definitely be looked forward to from investors and traders. All right, Kev, let's take a quick break. When we come back, we're going to take a look at another retailer ahead of earnings, and that's Walmart. Big box retailer has trended higher this year and is just below last week's all-time highs as expectations are elevated into their report tomorrow morning. Stick around, coming right back.
Let's walk through charts, one of the most commonly used features on thinkorswim.
Yeah, barbecue flush there too, down 11.25. Can't believe I didn't hold my puts. I literally bought puts up here, and then got them again here, and then got them again here. However, trading. But here we are. Moves finally happening. Still early. Go a long ways with how early it is. We got 438.29. I don't know how FOMC is gonna affect it. But yeah, market's just selling off. See if barbecue finds some support. 17.50. GME down 3.5. GNS back to that 50% retrace. 112. No, barbecue might never go green again. That is a possibility. Yeah, SPY is breaking below that trend. It's below it now by a pretty good shot. RQ down almost 12. 1919. RAD's down 5. Dang. He's going for full on retest of the lows. No sustained rallies. They're over. Market gave it to us for like 2-3 months. And now we're going to be short-living rallies. I just think of Upstart. I guess that was like a 3-month window where some stocks did this. Mostly AI. Going long. Gotta be careful. Quick. Be nimble.
For credit, you really have no downside risk, but a move to that 152 strike is the ideal level, Tom.
All right, let's walk through this example trade here. In the August 18th weekly or monthly cycle that expires in just 2 days, you're selling the 165, 170 call vertical, that $5 wide short call vertical. That's going to give you a credit, and then you're buying the August 25th weeklies that expire in 9 days, the 152.5 strike call, and selling the near-term August 18th 152.5 strike call. So 1 week wide call or put calendar to the downside. I said call. They're both puts on the 152.5 strike. You're collecting a credit. We've got 35-cent credit on this one. It's probably trading closer to 30 or 25-cent credit at this point, but for this example purpose, it takes your break even about 165.50, Kevin. So to your point, even if the stock goes up a little bit, you can potentially remain profitable on this. Where you start losing money is above that break-even price, about 160, just above 165, and if max loss above the 170 strike, which would be about $465 if you collected 35-cent credit on this one. So using a combination of two strategies here to take that bearish tilt, but it doesn't really equate to bearish because it could be a neutral strategy also, because even if the stock rises a little bit, you can remain profitable. The apex of profitability on that one that Kevin, that example trade Kevin gave us, is at or near that 152.5 strike put that you did the calendar on. You do have some assignment risk on the short call on the upside and the short 152.5 strike put on the downside going into expiration on Friday. So keep that in mind. All right, good look at that strategy in Walmart. But coming up after the break, Kevin and I are going to be joined by Landon Swan from Likefolio for a discussion on Ralph Lauren. The high-end apparel maker is struggling after reporting mixed earnings last week, and we'll get some data to see if it's an overreaction to the downside for the stock. Stick around.
Watchlist can help you keep track of securities you're interested in. To add a watch list to the left sidebar, select the plus sign, then Watch List. When the default list appears, select the name box, then Create Watch List. Enter a watch list name. To begin adding securities, enter a ticker symbol in the symbol box, then select Enter. Continue adding all the symbols you want in your watch list, then select Save. The existing list is replaced by the new one. You can also create watch lists from the Market Watch tab. After creating a watch list, you can add symbols to it from different locations across the platform. From the Charts tab, select the list icon and then Add to Watch List. From the Scan tab, right-click a security and then Add to Watch List. And that's how you make a watch list. For more demos on how to think or swim, head to the Education Center on tdameritrade.com.
Not only as it did before rip, we're breaking out of a channel we've been in for like 2-3 weeks. So that said, we do have FOMC still today. I'm not sure how that's going to play in, but this channel break that we've been stuck in could bring us down quite a bit. So maybe we have a rip for FOMC. I don't know. I feel stupid for how I traded this. A little bit stupid. GNS is killing you. Oh, close it so it doesn't kill you anymore. Alright, SPY's come down a little more here. Really hasn't like flushed yet. It's still somewhat controlled looking. I mean, it's moved down some, but it's not like I'm not like seeing it like real volatility yet. So it could still rip up, I guess, for FOMC, but yeah. Yeah, maybe double bottom on that retrace on GNS. You were listening when he said it got out too. Yep. Yeah, you can't use me for triggers because sometimes I don't say if I'm getting in or out, and I don't always say right when I'm doing it. Yeah, I got chopped through here a bit, stupidly. I want to just hold these puts, but the thing is I'm down on the day. And these have given me back quite a bit of my losses. This is the dilemma. If I close now, it's taking less loss. If I hold and it keeps going down, break back even, or even be back green. I want to hold it. We made the cup, made the candle, broken the low. Like some retrace. I don't have any more trades left. And if I'm trying to recoup the losses from my calls, I didn't sell in that triple top. This bill is adding up a lot. I've got my son trading a paper account. He did better than me today. He's like, yeah, look, I shorted it up here. I was like, cool, me too. Like, then I closed it down here, and then he was smart and stopped. I was like, oh, why don't you stay in it? No, that's good. Pretty soon you'll be hearing his voice on here. Especially if I don't have a voice anymore. Barbecue down 12.2. 1914. Engulfing candle there on the 5-minute. Not a believer yet, though. I think we could come up and have a little retrace and then keep coming down. These contracts really haven't moved a whole lot from here to here. That's surprising. Little bounce there on RAD, back up to VWAP. You're down 17%. This isn't that uncommon with IPOs, honestly, though. Even this. Hopefully it finds a bottom before it's too late to even recoup some post-IPO prices, though. trading in the morning. I think I'm gonna stop trading the first like hour. I did better when I did that. Use up so many trades just trying to get little scalps. I don't like scalping anyways. Yeah, what? These contracts are back to break even right here. What? Doesn't make any sense. How do I get that bad of a fill?
That you collect on this out of the money put that you sell. So good look at that strategy, Kev. Let's take a quick break though, and when we come back, we're going to take a look at Cisco Systems, which is near 52-week highs into their earnings after the close. Fast Markets coming right back.
Green Candle and Barbecue. Why is that so loud? Sound guy's still drunk. My daily still down 50% from when I bought it, 443. What? Is it a call? I'm going to try and add to my SPY put here. Bit of a gamble. I guess just, yeah, looking at a retrace back up to kind of the bottom of that cup. Some weakness. Also my situation, since I only have one trade left, and if I had more I would have closed my puts once this started slowing down and then reopened them here, but I just held through. That was just an average in.
News, a nice earnings per share beat. What you mentioned, some progress on inventories, some progress on margins, not back to where they need to be yet, but still some progress there. Unfortunately, some of the other things that they had to report on, like slippage and the culture issue, it seems to just have a cloud over. If we could just get back to the financials of this company and their performance, I think some of those clouds would be lifted, because you can make a case they're making good progress recovering from the discretionary inventory problems that they had. And frankly, that something Tom and I were talking about.
Would have been printing, I know. I sold my put. That happened twice, I think.
Got through
I sold, then it finally
inventory
dumped.
problems where Target, they've
That didn't
lingered a
happen
little
again.
further, Kev.
Yeah, well, Walmart has probably the best inventory management system in the business here. They immediately order
Selling
and
1000% profit 30
inventory as
seconds
soon as
before.
they see
Nice.
sales on their database. So I think that's just something that's very
I know, I don't
remarkable,
know.
and they have the adjustment and
Are we
the,
gonna, is this, I
the
can't remember if
leverage,
these are
if you will,
huge,
when it comes to their
huge mover
suppliers
days,
to really force
FOMC.
price to the downside here. I would say when you're
So
talking
it's just
about
minutes,
the
there's no
shrinkage
PAL.
levels,
But
I
these
mean,
are
this is
actually
not
huge
something
days, aren't
that
they?
It's just a Target issue.
Dang.
This is a
I'm
retail
gonna have to trade on my
problem
other account.
across the board. We will probably hear the same type of commentary coming from Walmart as well. One bright spot is that they do believe that the shrinkage could be managed for the remainder of this year. So I'm not sure if the market looks at that and says, okay, well, they're forecasting and they're trying to be a little bit more aggressive when it comes to the amount of loss that they're having by theft or by other means, or if the market believes that they're going to be able to manage it in-house. I'm not sure if they're going to have an answer for that. Unfortunately, we see the news every day, the snatch and grabs and these mobs going into the stores. I mean, it's a really big problem. But I think from the cultural standpoint, I'm not going to comment on that. It's here nor there, in my opinion here. And I mean, unfortunately, Walmart's the same type of way, right? So I think we just continue to move forward.
Nice little bounce on GNS there, back to VWAP.
All right, great breakdown here, Kevin, of the Target. You gave me a little bit of hope for this company with that reporting. I appreciate it. That's Kevin Green, Senior Markets Correspondent here, breaking down.
I suppose I probably should be out of my positions, though,
Now let's
coming
bring
into
in George
FOMC.
Stillis, Senior Markets Correspondent here on the network, to break down Cisco. George, is what we're talking about. Kevin and I will think of this one as an old legacy tech company, but it seems to be doing pretty well. I mean, the stock's consistently moved higher over the last 10 months. Expectations pretty high going into this report, but a couple of segments of their business have done really well lately. What's the backdrop here on Cisco?
Well, I think first off, the stock has performed rather well, about 14% over the last year. You're also earning close to 3% dividend for those who have been holding it over the past year or so. But I think with Cisco, there's an interesting transformation of their business. Now, they are, of course, the largest network gear supplier globally, but one of the things about Cisco that a lot of people don't necessarily know about is they are vertically integrating their software alongside cybersecurity. So it's becoming more of a networking or a software-defined networking-based business, which is bundled together with their hardware and also cybersecurity. So that seems to be very compelling from a full package standpoint to large enterprise businesses that utilize Cisco's technologies. But if you look at the report, the earnings are expected to be quite high relative to the same quarter last year. $1.06 is the estimated adjusted earnings. 83 cents was last year's print, and also last quarter at $1. So they're looking at 6% sequential quarter-over-quarter growth, but also 27% year-over-year growth on sales. which are expected to come in around 15.05 billion. Now compare that to 13.1 billion last year. That's about a 15% increase in revenue. So that's sales growth, or approximately, coming around this quarter. And it seems to be that, there's been some, enterprise spending cutbacks, particularly in the back half of 2022. That has improved significantly in the first half of 2023. And their guidance, I think, is going to be important to give us an idea on enterprise spend, especially with network gear that is very needed when you have the demands that artificial intelligence are placing on enterprise-based businesses. At the end of the day, if you look at the last quarter results, also meaningfully speaking, is that hardware sales weren't growing very much, but it comes down to software sales, which were higher by 18%. And that speaks to better margins. And in fact, if you look at the net income margin over the past 4 quarters, it's about a full percent or 100 basis points higher than their 5-year average. And that's not a function of higher prices, because gross margins are actually down by 100 basis points. So just that difference alone, a 1% net income higher versus gross margins that are down by 1%, speaks to a better optimized earnings power for the business. And I think that's one of the reasons why the trend is nicely moving to the upside.
Like, doesn't Powell usually talk after FOMC though? Weird, he's not.
Go ahead, Kev,
George.
did you have a question there? Yeah, go ahead.
Sure. Oh, sure. George, some of the numbers that
Well, it's a good thing I held my calls. I wondered if we might have a huge day.
$1.06.
We get a big rip up on my calls, I'll dump them.
George, that's a 28%
I just opened up a strangle today. I would have saved a lot of trouble.
That you just mentioned. The
FOMC
demand for their switching products, their growth in subscription software. This company, and Tom and I will admit, it's been around a long time. It's one of the legacy companies like this. These growth numbers they're putting up are actually pretty impressive. But that being said, the run the stock has had is also pretty impressive, George.
It has. I mean, for the growth elements of their business, I mean, this quarter again is, I think, very monumental, because they're pretty much numbers that the company hasn't seen in quite a few years.
That makes me want to save a couple of these puts too.
I think the profitability profile of the business is very stable. It's always been about 20%. Now, last year it was about 21% on gross margins that are always above 60%. So there's really consistency in Cisco's business. Their growth outlooks are not necessarily very robust. But speaking of this particular quarter, I think their software sales have improved significantly in the past 2 quarters, that now, if they demonstrate better hardware sales, that'll be just more sweetener to the stock, as well as, again, investors who have been holding on to this name. I think it's one of these larger, network gear companies that the major large institutions or companies stick with, because it's a trusted brand, but they're also, again, integrating security and software-defined networking very well. And that's, again, very appealing from a value proposition to those large enterprises that utilize their equipment.
All right, great backdrop for us here, George, on Cisco. That's George Tillis, Senior Markets Correspondent, breaking down the report, or Cisco, ahead of their earnings. But Kev, when I look at this company, I immediately go to the rally that it's had, up
sure.
12% this year. And it's just been, it's not like one of those parabolic moves to the upside like an NVIDIA, but this has just been a slow gainer over the last 10 months.
You already said.
And the option market's pricing in about a $2.10 move or $2.20 move either way in the shares post-earnings. So implied volatility has come down a little bit as the stock's ground higher. You expect a little bit more going into event risk. So I looked at a strategy here, Kev, that takes advantage of a move outside of maybe that one standard deviation move of about 4% that the option market's priced in. So I looked at buying an iron condor in here, Kevin, really short term as an example, going out to the August 18th monthly cycle that expires in just 2 days. And we're going to buy a call vertical. We're going to buy the 55 strike call, sell the 57 strike call, and then buy the 52 strike put and sell the 50 strike put. You're paying a debit of 75 cents. Each one of these wings of the iron condor, $2 wide. So your potential reward is $125 per spread, above 57 or below 50. And you've got $75 in risk on this one. You see the break evens there between about 51.25 and 55.75. You want it to be outside of those break evens over the next couple of days. Kevin, your thoughts here on buying the iron condor, pretty good risk-reward setup.
Yeah, your expected moves are right in the middle of where you've set your strikes. If you notice that, Tom, the 55 call, the 52 put, you're right there. And yeah, this isn't going to be a home run, but you've got a chance, for about 150% move or a profit on this trade. So you need movement, obviously. This is one that pays theta. It doesn't collect it. It doesn't play range bound. You're looking for a move out of the range, but anything to $57 or anything to $50, and you've got a nice winner here, Tom. But like I said, you need that movement, and with an August 18th expiration, you need it quickly.
Yeah, that's true, and because you're buying it, you do have
Market's
that ability.
moving so slow.
Liquidity is
It
provided.
really is waiting
maybe
for
it
FOMC,
moves
I think.
above 57.
Even
but
with
then
this
maybe
drop,
has
like,
potential to move back down. Maybe you close
was
it
very
ahead
controlled
of time,
looking.
ahead of expiration here this Friday. You have that option if the market's open.
I'm not giving up on
Remember
these
that,
puts.
as always. But yeah, good look at you need a move type of strategy. All right, that's going to do it for Kevin and I today here on Fast Market. But stick around right here on the TD Ameritrade Network.
Stick
Next
around.
what's coming up.
Any correct people and trying to talk stocks? What do you mean? Like calling it NVIDIA, not NVIDIA? Little head and shoulders there at the bottom. See where our flush takes us. Or if we just get more slow selling. Like if it wasn't FOMC day, this selling would have been much more aggressive already. Here we go! Monster! Fine, let's do it. Crush all my other positions other than these daily SPY puts. All my other longs just getting clapped on today. eBay bounced back up. Doing the dragon tail around VWAP.
Next Gen Investing. I'm Jenny Horn alongside Alex Coffey. And Alex, we are seeing another day of selling. So we were discussing yesterday, if we see this persist now for several sessions, we could start to actually see things move overall. So it does appear that we are seeing more weakness today, but all in all, an earnings relatively light day again.
Yeah, it certainly seems to be the story of the last few weeks, which has been every rally has been sold, but we're not necessarily falling out of bed here. We're not seeing the rug pulled underneath this market.
I bounced on low of the day there.
Downwards moves, but we have been, I would say,
Not
in a fairly
yet.
clear downwards trajectory for the better part of the last half month. We haven't ventured far from the high of the year, just over 4,600. But we're starting to now get, 2, 3, 4% off that mark. This is where, potentially a pretty critical pivot point may lie.
Can you guys share
go
the
down and test, those former highs from
court hearing
earlier
in
the year?
Discord?
The 200-day moving average, I believe, is somewhere in the 4,200
Where's Cameron?
range in the S&P 500. Or is this a level where buyers come
Heck,
in? I think
where's
the
Cameron
story
been?
is still unwritten on that. And we'll
Don't
see
do that,
ultimately,
Spy. Don't do
where
that.
things go.
Now, I will say a bright spot today,
Little
surprising
shoulder of
to
liquidity.
my own knowledge, has been retail. I mean,
Little
I was
fleshy
shocked to
flesh.
see some of these moves today to the upside, and names like Target, TJX. We'll be looking more at some retailers to come later on in the show. We'll be kicking things off here with our upvote and downvote segment. Following that, we will chart and trade those upvotes.
Barbecue
Our
back to
FOMO name
VWAP.
is all things NVIDIA, of course.
Down
I
10
think one of the
1/4.
most FOMO-type feeling stocks of the year, as we are down about 0.5% today, but all in all, more positive analyst notes on NVIDIA. Up about 7% now week to date. Then we will look at Tesla with another string of price cuts now to its Model S and Model X, specifically in China. Those are its higher end vehicles. Last but not least, we will look at D-Lo or D-Local, which is soaring on some better than expected second quarter results.
Look, China's got some issues right now. The economy over there is sputtering. The reopening wasn't what it was promised to be. Tesla, like many other companies, doing what they can to try to spur some demand. So I'm excited for that conversation later on in the show. And seemingly NVIDIA has, done its best to insert itself into the conversation of, most widely traded, most widely watched names. I mean, it was Tesla and Apple on its heels for years and years. And then, pockets of meme stocks or maybe a Meta platform.
Where are they?
Netflix
Where have they been?
is making headlines, but consistently throughout the year of 2023, NVIDIA has inserted itself
road or
as one of those
something.
top traded names on a daily basis. And with earnings on the horizon, it's no surprise that the interest is as high as it has ever been when it comes to a name like NVIDIA. So excited to talk about that too later on in the show. But let's do upvote, downvote, Jenny. Not endorsements, not recommendations. A couple post-earnings looks, couple pre-earnings looks. This first one here on this list is a name that I know we've talked about with George Tillis on Under 30. This is a post-earnings look at Cava Group, which is, I guess, the parent company of the Mediterranean fast casual restaurant chains following under that same name of Cava. I've never been to one of these, but from what I understand, it's almost like a Mediterranean Chipotle.
Correct. It is the Mediterranean Chipotle. That's a great way to put it. And actually, they are not here in the Chicagoland area yet. They do have plans to expand, but they are more heavily located in the East Coast as it stands right now. This company did IPO on June 15th, and we've seen shares, more than doubled from its IPO price on that trading session. Since then, it's been a little bit wobbly, not necessarily unprecedented for a company that is new to the publicly traded realm. We are down about 0.6% today, and they did report some strong financials as their first really quarterly update as a publicly traded company. The company did post earnings and revenue for its second quarter that did beat street expectations. The CEO said that despite some higher inflation rates as well as the upcoming, some of these more, I'd say, negative catalysts that are weighing on them, they still see a very strong all-in-all market here, and it still plan to expand at the same
Spit it
rate
out, Jenny.
they once were. We did see a lot of analysts then raise their price targets on this stock. Jefferies raised their price target to $54 from $48 with a buy rating, highlighting they see an attractive runway for Kava to further their scale, and they believe that management's targeted 25 to 30% adjusted EBITDA growth long term is achievable with the remainder of its algorithm at a realistic bar where multiple opportunities for upside to emerge over time. We did see net new restaurant
We got 55 minutes.
70. They do see now their same restaurant sales growth between about 13 and 15%. This company does currently have around 280 locations in the U.S. They plan to have over 1,000 open by 2032. So hopefully we get one in the Chicagoland area. We can finally try it out because we've discussed this name enough. I want to actually have it and eat it and try the product here, Alex.
Yeah, and you know, when you're looking at this from an investment and trading standpoint, obviously there hasn't been a ton of trading history. It's a relatively newly publicly traded name. And so you just got to look at this, and if you're an investor in this, it's still higher than where it first started. It's obviously had a rough last couple weeks, not exactly the blowout quarter maybe you're looking for, but to only be down 0.6% when clearly the market itself has sort of changed its tune, I think can be sort of a moral victory here for investors in this name. We have this script of what a fast casual restaurant chain
close to the highs.
Success story looks like. You don't have to look any further than CMG. If you can do half
Look at
of
just
what
this intraday move.
Chipotle has done over the last
You caught it
decade,
there.
it would be a monster win for a
28%.
company like Kava. So we'll see
2
how
hours.
the rest of the year shapes out. I'm excited, as you said,
There
for
goes
when this
SPY.
one expands.
Oi.
If it finds its way to our
New low of the
region
day.
of the country, to give it a try.
Yes.
Next one on the list is another, market that I guess targets a different part of the world, and that's JD. It's not newly publicly traded. It's been one we've watched for quite some time. China stocks have struggled.
The same Head and Shoulders
JD
right here.
is no exception to that.
What we had here when
we
it
also just heard from them from
broke
earnings.
the
Not a huge
neckline.
move, but a notable one, down 2%.
Oh, maybe we'll get another move this big.
Yeah, and this is one of those stories where
Or
I think
hops.
it's important to differentiate. Is this a macro story, specifically a macro China story, or was it their earnings? Because their earnings smashed expectations. We did see this sort of gloom reflected across a lot of these Chinese markets amid worries over a slowdown in the world's second largest
there's your
economy.
flush.
We did see the fact that they were yesterday collectively lower, these Chinese ADRs. Another day of selling. Now this putting its losses for the week at about 3.5%. But again, reported EPS of around 74 cents a share on revenue of $39.5 billion in the second quarter, beating expectations. Their net product revenue grew by around 3.5%. Net services revenues rose 30%, and their retail revenue rose by almost 5%, all on a year-over-year basis. From a margin standpoint, their operating margin expanded by 90 bips to around 3%. Their non-GAAP operating margin of their retail segment was also around 3.2%. That was slightly beneath what they saw back a year ago. Now, they generated around $6 billion in free cash flow, and they do hold around $33.5 billion in cash and cash equivalents. So, I mean, a really strong report. I just think, again, this was completely overshadowed by these major uncertainties right now within the Chinese nation. We did see these, economic data yesterday that disappointed. We got export and import figures last week that disappointed. I don't think today's move to the downside is necessarily a reflection on the strength of their quarterly earnings, Alex.
Yeah, I think if we're going to be nitpicky, I think that there was a little bit of a concern with the retail margin story. E-commerce competition has really ramped up in the last year, and Alibaba has, spent quite a bit of money to compete and hold on to its market share in that space. That's probably why you saw a little bit of a compression of that retail unit margin. And I think that probably weighed on the free cash flow, which didn't expand nearly as much as Alibaba's. You only saw about a 48% year-over-year jump in free cash flow for JD versus then just over 75% at 76% Alibaba jump in free cash flow. So if you're trying to compare these two rivals head-to-head, there was a little bit of disappointment. But I tend to agree with you. I think this is more of a wobbly China story, more so than a wobbly JD story. Unfortunately, JD serves that Chinese marketplace and is one of the few ways that U.S. investors and those around the world express a viewpoint on the Chinese marketplace. So a little bit wobbly here today, but not a massive move, granted the volatility
Barbecue
that JD
popped up
trades
there a little
with.
bit.
It has been a rough last couple years for this stock, though.
Probably put a stop on these contracts just so I'm break even on the day at least.
Now trading down in the 35 handle. So what a fall from grace for once stock that seemingly investors couldn't get enough of. Next one here on our list, though, Jenny, is a pre-earnings look at Tapestry. This is a name that's been in the M&A news lately, and that's why you see a pretty big drop down in the stock shares a couple days ago.
238 were the calls.
Yeah, this name got absolutely crushed when they announced the acquisition of Capri, which then gives it now this further reach into the luxury market, especially in Europe, now acquiring brands like Versace and Jimmy Choo. They do also, of course, operate under brands like Coach, Stuart Weitzman, and Kate Spade. So this name, though, with that monster move to the downside, we saw just in one session alone. Now it's down about
6.5 now. It's above VWAP.
Into that massive move to the downside, which was just about a week ago, we actually saw shares that were up about 8% on the year. So they've completely changed now their overall sentiment, but I think it's important to zoom out and look at the bigger picture here. It was still sort of wobbly even with that monster move to the downside. It was trending just right around its 200-day simple moving average, but this name is now down about, it's down almost 20% now month to date. So into the second quarter print, which is tomorrow morning, we are seeing the fact that analysts are expecting some still relatively strong growth, earnings of around 96 cents per share, which would signal some expansion on a year-over-year basis. They have also seen some really strong figures out of China among these Gen Z customers.
We get a bounce on the 18 level.
Now they're facing challenges in
Look
the
for
US,
a handle to form on GME
due to these potential interest rate hikes and, of course, softening demand. Coach has a significantly greater presence in terms of its physical reach in China. This is expected to be a key beneficiary of the China reopening. Then I could also say, based on what we just discussed with JD.com, does that give you then concern for its growth when we've seen that type of growth from so many of these Chinese names? This luxury market, though, in China has...
What's that, Jenny?
25% of total global spending. So while it was seen, I think, at one time as their reach into overseas as a strong point for this company, just again, given some of the headwinds we've seen from a Chinese macro standpoint as well as Chinese earnings, makes me a little bit concerned into this report.
Yeah, still about 60% of its revenue the last few years has been from the Americas, particularly the United States. So I do think that while it's exposed internationally, we certainly talk about names that have more exposure, but that's certainly a part of the story. My big question for this is how much is this announcement of the purchase is going to dominate this conference call,
1586,
regardless of how the numbers shape up. I feel like
18
all
level,
the headlines
and yeah, I'd say that 15 is definitely
their
on the table
around that acquisition. So we'll see how things go when we get these numbers in this subsequent conference call. Last one here on our list is Ross Stores. This is obviously an apparel retailer that kind of operates in the discount realm, and we know that when budgets get a little bit tighter and you start worrying about pennies here and there, these discounters tend to be a little bit more resilient, and the story, I think, is somewhat confirmed by Ross. It's not been a giant winner, at least year to date, but it's done pretty nicely over the last 12 months.
Yeah, and it is our lone green name of the four, so at least excited to talk about a name that is moving to the upside today. It's up about 1.6%. They have earnings also tomorrow. Now, we did see actually on their last earnings call, they were optimistic about this
on GME would be up to 22.85.
The company did expect their comps to remain flat on a year-over-year basis, while total sales were forecasted to increase around 1 to 4%. Bottom line is also envisioned to be around $1.07 to $1.14 per share in this fiscal second quarter. They've been pretty consistent with the execution of their store expansion
glad those worked out,
plans,
man.
which are likely to be
You held that
a
through some
catalyst to their
tough
top-line
times.
growth. The company's store expansion efforts have been focused on continually increasing penetration in existing as well as new markets. Now, the second quarter of this year is expected to have gained from their
You just
return
walk
to
away and not look at
some
it for
more
the first 3
normal
hours?
Store opening targets. Gains in stores are also expected to be a tailwind in this to-be-reported quarter. They are forecasting adjusted earnings of around $1.16 a share on revenue of around $4.7 billion. That would be up around 3% on a year-over-year basis.
No stop losses.
And the
No
consensus mark for
surrender.
their earnings has moved up by about a penny in the past 7 days. So analysts getting slightly more optimistic optimistic if you could say that. Now, in the last reported quarter, they did deliver an earnings surprise of around 3%. In the trailing 4 quarters, they have delivered an average earnings beat of around 11.5%. So relatively strong track record. Like you said, it hasn't necessarily been a strong or a super performer on the year. It's like unchanged now on a year-to-date basis. But seems like the retail space right now, the earnings are just coming in better than feared, just based on some of the figures we've gotten out of like Target, TJX, for example.
34%.
Yeah, and kind of
That's
like
not bad.
a name maybe like Walmart in a different kind of goods space, it's just more resilient than the pure discretionary peers that you have. I know apparel is always relatively discretionary, but at least in the discount world, it's seen as, you know, capturing those kind of necessity purchases for those whose budgets are a little bit tighter. But about 70% of analysts like this name with a buy or better rating. But a price target consensus-wise, it's only about $120.75, not implying a ton of upside. We'll see if those are adjusted either higher or lower post-earnings on this one. But Jenny, with 2 pre-earnings looks and 2 post-earnings looks, I think it's pretty clear we're going to go with Ross and Tapestry here.
Yeah, you couldn't pick more different retailers, as one operates more into the discount realm. I always think of Ross Dress for Less as their slogan, or at least it was at one point, but then Tapestry obviously into the more luxury realm. So I think a good way to look at the way that retail is shaping up, and we're seeing the clear winners and losers right now in this space. So we'll be diving more into our 2 upvotes today, of course Tapestry as well as Ross. We'll be looking at some example trades as well as some technicals. Stick around, Next Gen Investing will be right back.
Leg down for RVs completed. Here and left, your view upswings. Ouch, publishes. That hurts. What's your stop loss if you're down 34%? What do you, like 50%? Where do you take losses? He was even more specific than that, Trace. He said he's not in BBBY or BBBYQ.
Short term and medium term, our yellow 21-day and orange 63-day, were mostly on top of each other, kind of clustering together. That suggests that there wasn't a very strong trend really one way or the other for much of this time here. But things changed notably within the past week or so. We fell below all three of our moving averages, including our long-term purple 252-day EMA, our moving averages themselves. The slope is starting to trend downward. That's a warning sign of trend change here. So even though we didn't have a very strong trend going into this downward move and heading into this earnings event, now things are definitely more skewed toward the downside here. We can also see, looking at our RSI, our measure of momentum there on the bottom, that the move catapulted us into that oversold area. Now that's a sign of bearishness. It's a sign of weakness in the stock. That's something that when we do cross into that oversold area, it's typically regarded as being a sign of further weakness to come here. And when you couple it with the other things that I mentioned, the closes below our moving averages, the slope of the moving averages turning down, it doesn't paint a very rosy picture heading into earnings here. Now, earnings could change everything, though. You never know what there could be some surprise into this earnings event that could send price back up into more of an uptrend again here. But really, that's not what the bulls would typically want to see heading into this situation. And I thought the volume nodes on this chart were worth mentioning as well. And when we look at our volume profile study on the right, the nodes are those spikes. Those are areas of heavy activity. Those are often regarded as support or resistance. You can see we're pretty close to one near about the 35 level there. So that would be an area of heavy trading. That's sure enough, that wound up being where price started to solidify after that big downward move. So the problem is that the next volume node isn't until we get to around the $31 level or so, 31.50 or 31 to 31.50. So we've got a ways to go potentially before we would hit any other significant support. There's not really much in the price activity to provide us with much support here at this current time. If we were to make our way back to the upside, look for the 37 level. There's another node right around there. You can see that kind of spike in trading activity just a bit above current prices here. And we're kind of in the middle of between our highs and our lows for this year as well. We're down about 27% from those yearly highs. We're up about 25.6% from our yearly lows. So not a big net change over the past year here, but the recent price action has been concerning, to say the least.
Agreement.
Yeah, and I think that, Rick, it just goes
Legal
to show
document.
that one
Given
day can completely
you can have some
reset the
lawsuits
trend.
against
like
him,
from a technical
but
standpoint, we've sort of
not like
reset
illegal.
on
Wouldn't
that
be
day
civil.
we saw news of the acquisition. So, I mean, maybe we could see earnings give some of the bulls some love here, but obviously we'll have to wait and see until we get those results tomorrow. But now in trading this name here, Alex, walk us through what you're thinking.
I don't think he's in it.
More neutral leading strategy. Again, its valuation and its year-to-date performance just was completely reset about a week ago.
Yeah, and for a good reason, right? I mean, the stock's balance sheet
eBet
changed
kept
tremendously.
Boom, next level up.
How you're going to pay off that
10
massive
cents.
acquisition is that you're going to
Did
take
it.
on more debt. It changes the financials of the company and its trajectory quite a bit. And there is that repricing of the stock. Because it was so recent and there really hasn't been a ton of conversation around this yet, I think there's a chance that this particular acquisition just kind of sucks all the air out of the room and dominates this earnings call. And as a result, maybe just not a lot comes out of this particular earnings announcement. If you kind of agree with that line of thinking, maybe you look for something more in the neutral camp for a trade strategy. Rick had talked about that lower end of the value area as represented by that volume profile study in that volume node around 35. Well, I had that basically highlighted here as the straddle that we're selling as a part of this iron butterfly for this trade illustration. We're just going out to Friday, selling the 35 straddle, buying $2.50 wide wings. If we're able to do this for $1.50 credit, it's going to bring the overall risk down to $100 on a max profit potential of $150 if it perfectly pinned at 35. Most importantly, though, it casts a $3 wide net around the 35 level, so we have a break even down at 33.5 theoretically at expiration, as well as high as 36.50. So really looking for kind of a quiet post-earnings move. Of course, this stock's been anything but quiet when you look at the last few days.
You bet new high there, breaking out.
Price drop-off due to that acquisition. but that news is out now. The stock has been relatively quiet since then, looking for more of the same post-earnings. You can see it's a pretty triangular-looking risk profile. Best case scenario is a move right to 35 in risk in both directions. So looking for a small up move and a pin towards 35 by the end of the week.
Yeah, now to shift gears here and look at a name that operates again in the retail world, but serves a definitely different demographic. That is Ross Stores, which is unchanged on the year here. It's performing, nicely today, given the enthusiasm we were seeing over some of these fears that had plagued names like Target specifically. But now walk us through what you're seeing here, Rick. This name is also a pre-earnings look, and of course, we are seeing a lot of these retailers in the green today, despite the overall selling in the market.
Well, once again, we're seeing a stock that has spent a lot of time going sideways rather than having a lot of strong directional bias. We can see that from, it looks like about March to June, we were mostly just drifting sideways, kind of hugging that purple 252-day EMA, bouncing around it for a bit here. But we've been trending upwards since our last earnings event, kind of just grinding upward here rather nicely. We've closed above all three of our moving averages. The moving averages themselves are trending upward. They're diverging farther apart from each other. We can see that we keep making new highs. We're only about 5.5% below our yearly highs, so only about a stone's throw away, really. It could be something that could be in the cards coming up recently. Once again, we're near a volume node as well. We can see that this volume node from between about 115 to 116, around where current price is only surpassed by our volume profile point of control, which comes in around the 103 level, and that's roughly where price was bouncing around during that period that I mentioned earlier when we were kind of oscillating around our 252-day EMA. We can see one thing that is a little noteworthy about the RSI. We are seeing a little bit of bearish divergence. RSI is not making new highs while price is making new closing highs. We only had a brief foray into the overbought area. We weren't able to make our way into it again. So now we're seeing RSI is even lower than it was at its previous peak as price was topping out there. So kind of an interesting situation. Not really something I would be super worried about because we are heading into earnings. It's not uncommon at all for momentum to drop off as we head into this event risk situation here. So that's something to consider, though. It's always worth keeping your eye on momentum and keeping your eye on what that could possibly mean for share prices. So if we were to keep going upward here, the 122 level is about where we topped out previously. That's our old, roughly where our old closing high was. So that would be an area to watch. We had a bit of a situation here where we bumped up against our yellow 21-day EMA to the downside, so that could be an area to look for support. That comes in around the 113 level right now. Below that, we've also got the 63-day EMA near 110, so a couple more obvious points to watch to the downside.
Right, and Rick, obviously, like you said, momentum cooling off here a bit, but I think this is sort of more of a wait-and-see event as people are waiting to see how some of these more discount retailers are faring, because we've heard from TJX, which it would definitely be a green light for Ross Stores. We will leave it there. Appreciate the technicals. As always, Rick Ducat, our chart master. So now in trading this name, Alex, you are of the belief that some of these names that do offer lower price points are more resilient with the overall consumer spending. So walk us through a more bullish leaning example trade.
Yeah, this one's pretty straightforward. Rick had highlighted the, kind of the peak out price, that former high just over 122. Looking for this earnings event to possibly be the catalyst to send it to a new high for the year just above that level. Looking at buying a week over week 123 call calendar in Ross, where we're selling this Friday for this illustration and buying next Friday. That package at the time was trading for about a 30-cent debit. That means total risk or max loss potential of $30. It's a bullish strategy because, well, 123 is higher than the current share price for Ross. If we look at the risk profile, though, you'll see we talk about this every time. It's sort of the aim small, miss small strategy. It's a strategy that requires precision, not just directional accuracy, and so we can overshoot to the upside, and you can undershoot, of course, to the downside. Looking for a move right to 123. That's the apex of that profitability graph for this one. Best case scenario would be a 123 price tag at the end of the day on this Friday. 30 cents the debit, again, $30 in risk.
Yeah, I think that's well put. And obviously, two different ways to look at retailers that both have earnings tomorrow. Also important to keep in mind for both of our example trades today, they do contain multiple legs that can lead to higher transaction fees. Short options can be assigned at any time, and carrying option positions into expiration can add risk, like unanticipated exercise or assignment. Now, coming up next, it's time for FOMO. We are looking at NVIDIA shares, which are slightly lower today, but not able to dent the move they made this week, up 7%. We'll discuss more of the analyst noise on that name coming up next.
Many option traders tend to focus on price and direction, but implied volatility can also be a big factor in options trades. In the Options for Volatility course, we explore what implied volatility is and how it can potentially affect the price of an option. For example, let's say an option trader wants to take a bearish position on a stock, but isn't sure whether to buy a put or sell a call. Both strategies are bearish, but looking beyond direction to consider the impact of implied volatility could help the trader choose between them. We also introduce strategies designed to harness changes in implied volatility. For instance, time spreads like counters and diagonals are designed to benefit from increases in implied volatility. Iron condors, on the other hand, are designed to benefit from falling implied volatility. After learning about the strategies, you can take the final assessment to test your knowledge. Head to the Education tab on Thinkorswim for the full Options for Volatility course and a whole lot more.
When traders tell us how to make Thinkorswim even better, we listen. Like Jack. He wanted a streamlined version he could access anywhere, no download necessary. And Kim. She wanted to execute a preset trade strategy in seconds. So we gave him Thinkorswim Web. Because platforms this innovative aren't just made for traders, they're made by them. Thinkorswim by TD Ameritrade.
I'm Nicole Petalides, host of Trading 360 and The Watch List, live on the floor of the New York Stock Exchange, where we bring you breaking news, experts, CEOs, influencers, and analysts. It's all available on Schwab Network.
Welcome back. It's time for FOMO. Alex Coffey alongside Jenny.
Buongiorno.
Jenny, we're at that time of the year where it's like countdown season. It's like X many days till you go back to school. You know, X many days till NFL and college football return. And we're exactly now 1 week away from NVIDIA earnings. So, sort of the crown jewel left in the marketplace from a really market-moving event, from a stock-specific story that we know is on the case. NVIDIA earnings 1 week from today after the close.
And I always like the way that NVIDIA has historically reported sort of on an island. Like
Can't
it doesn't
unhear
report with the other big tech names or any of the other Magnificent Seven. So it does give us that catalyst to look forward to. And like you said, it's the countdown season. So it's also 1 week until my fantasy football draft, which is maybe
Had some
a
good
little
medicine
bit less
for my
important
sickness
than
last
NVIDIA
night.
earnings. But nonetheless, seeing more analyst activity today that is extremely positive on this name. I mean, so rarely do you actually find negative commentary on NVIDIA at this point. It's amazing to see some of these analysts that have
Had honey in it,
significantly higher
had lemon
price
in
targets,
it.
given the fact the stock's up almost 200% a year to date. It's up 305% off its 52-week low. Now, all we talk about
And it
is
had
the
some whiskey in
pullback
it, too.
NVIDIA shares, but I mean, it all depends on where you're looking at it, because while it has traded at around this $430, $435 mark for quite some time, we did see shares fall
Close
back
my
about
puts. Too scared.
6.5% now month to date. But nonetheless, I mean, it's still a name that hasn't been around its low, which was $108 a share in quite some time. So I think the word pullback to me is maybe even overstating some of the weakness we've seen in
Bring it on the
NVIDIA.
account for
But
the
Piper
day.
Sandler today
And I'm done trading.
did raise its
Perfect.
price target on shares to 500 from 450 while keeping an overweight
Small
rating.
losses
If you could
and
recall
very
earlier
small
this week, we
gains.
discussed Morgan Stanley,
Whee!
which also did raise its price target to $500 a share. That seems to be the sweet spot right now. Actually, all the analysts covering this name, the mean price target is around 501. So the analysts from Piper Sandler, though, did say they expect NVIDIA to beat and raise across the board for its July quarter, as well as its earnings revenue expectations for its October guidance. The firm does see several factors that gives it confidence for the continued growth of the company's data business. They also do believe that NVIDIA has an upward bias given the strong traction of these large cloud players, potential traction in enterprise, as well as some tailwinds out of China. Again, China could be maybe the one breaking point or one weak spot here, because that has not been an area of the economy you want to discuss on your earnings call. You want to push into all things AI. This name, though, of the analysts covering it, there are 44 buy ratings, definitely skews more optimistic, definitely very loved by analysts. Like we said, though, could we see history repeat itself? They blew past expectations. In their previous report, we saw a phenomenal post-earnings move. So will we see that now happen again, or are things just right now, they ran up too far too fast? I said that last quarter, and we saw that people like me that were, sort of pessimistic were proven so incorrect. So walk us through what you're thinking for an example trade here, because it's difficult to look at a name that is, it is off its highs by about 9%, but it's the best performer this year by a lot.
Yeah, we're still a week away, obviously, Jenny, but what I will say now is we'll have plenty of time to really get into the earnings preview throughout the next week, is if NVIDIA falls short of its numbers, it did it to itself. They reset the expectations so dramatically last quarter that if they don't meet that bar, the bar is only that high because they set it that high. So we'll see what happens. I can't see the exact same thing that happened last quarter happening again, just because how high can you set the bar? That being said, doesn't mean the stock can't move tremendously to the upside, and it's certainly done so in the past. So we'll see what happens a week from today. From a trading standpoint, though, I looked at a neutral to bullish strategy. A couple days ago on the show, we looked at buying a $500 call calendar. I think for someone who has a particular price target, that particular strategy still could make sense. But for the sake of switching things up and keeping it fresh, I looked at a skewed put butterfly in this name, particularly after a pretty nice couple days of price action in NVIDIA as it's rallied off its recent lows. Looking at a neutral to bullish strategy here into that earnings week, which is, again, 1 week from today, was where they're slated to report. Looking at something that centers around this $400 level. It's a pretty critical level. We spent a lot of time in that area before breaking through to the upside. What we're doing in particular here is buying the 402.5 put once in next Friday's expiration, selling 2 of the 400s, and then defining the risk by buying the 395 put in that time cycle. If we're able to do this for a 50-cent credit, it essentially is going to bring our risk all the way down to $200. Our break even would be $397, and we have a strategy that can peak out up at $300 if it perfectly pinned at 400. So omnidirectional, best case scenario is actually at a lower price, as the risk profile will show, but a strategy that is relatively high probability, but granted it does capture that earnings event. So if we know anything about NVIDIA, it is capable of moving over 10%, so bear that in mind if you're looking at a strategy like this.
Yeah, and obviously prepare for a high volatility event, because this is one of the only big names, or it is pretty much the only big name that's reporting at this point. So there will be a lot of focus on NVIDIA when they report next week, of course. But that does it for our FOMO segment. Now, coming up next, we will look at another name that oftentimes does evoke that feeling of FOMO. That is Tesla. Although today and this week to the downside, shares are lower just by about 2%. It shed about 6% this week. We'll discuss more on its price cuts coming up next.
GNS rewarding the dip buyers. I want back in. I want it. I just kind of want to wait for the meeting tomorrow, though. A nice retrace. Buy's climbing up here now. Got 15 minutes to FOMC. Or no, is it? My brain's so hazy today. Yeah, FOMC today. Buy climbing. Wow, I barely got those puts in time. This looks like more than just a bear flag climb. This is the beginnings of a reversal, I would say. Back to VWAP. Getting ready for the meeting. Back to safety.
Try to adjust these prices to meet the consumer demand. We will see if China will increase or enhance its stimulus measures for consumers to try to spark their economy here. But right now, Tesla's trying to take it into their own hands and trying to meet the consumer where they would like to be met.
Yeah, and we got to be careful what we wish for with the stimulus measures as well, as China, of course, has historically taken more of a managed decline approach, more trying to prevent the worst case than spurring growth like we often have seen, our Fed or our fiscal government take. So that's something to consider. But, Kev, what else is there to look at here in Tesla? They're always making stories. Is there anything on the technical front or anything else that you're seeing with this particular company, which we know has so many eyes on it on a daily basis?
I think right now it's going to be their future plans when it comes to production and distribution networks here. I think the most interesting part of the Tesla story is their potential on trying to expand out in India, and that would be very critical when it comes to not only its supply chain, because India is pretty much at the heart of not only the raw materials that they would want to source, as well as the methods as far as trying to deliver cars through transatlantic, maritime delivery, as well as trying to maximize the opportunities that could be there in India as well, which is a very rapidly growing economy and trying to convert itself from a developing economy and emerging economy into a well-established one. And so I think that's going to be the biggest and most interesting story, as well as the power generation business, which is very small when you look at its overall revenue, but it is the fastest growing business and it's the highest margin business as well. And maybe there's going to be some incentives, hopefully, down the road here that's provided in order to try to ramp up that side of the business, and that's more than just charging stations. That's at home, power banks, and things of that nature. And I think that's another exciting item to look forward to in the near future.
Yeah, and Kevin, it's just been interesting to see this trend reversal, which I won't say reversal entirely, 'cause it's still up 85% this year.
There's
but
a cart full behind him.
Performer it was about a month, 2 months ago at this point. We will leave it there. Appreciate the breakdown. As always, Kevin Green, Senior Markets Correspondent for the network. Now, last but not least, today
You're up,
it's
then
time for
down.
Under 30.
Well, I'll go to the doctor. I'm fine.
On a positive note, thank goodness, after all that negativity, we were looking at D-Local.
Top 5 killer.
35%.
Malpractice.
We'll discuss more what's driving the move higher coming up next.
Unless I need surgery. Not letting them touch me. Wow, that SPY rip back to VWAP. In a hurry. Even some surgeries, best for me to do at home. Getting all cuddly cozy ready for FOMC. Pump. No resting on this rip to VWAP. Pullbacks needed. Alright, gotta stop trading at the beginning of the day. I don't like it. I don't like scalping.
year to 161 million, beating the estimates, and also compared to 101 million last year. The other thing is they did denote some pretty impressive payment volumes, which increased 80% year over year, but also 22% sequentially quarter over quarter. And net revenue retention was over 148%. And that gives you an idea that those who are utilizing this service are keeping the service, but also adding on additional features, and people are paying for it. And that's important because it gives you an idea that the earnings profile of the business is improving alongside, looking at sales growth over the last year or so, inclusive of the quarter they just reported was 60%.
Medicine with a
and
straw?
the company's also guiding
What?
for an additional 53% growth for the full
Never
year
heard of that.
next year compared to this year. And earnings growth is expected to increase to 41% of
20
sales.
surgeries?
So I think this is an impressive move for a
surprised you're
stock
still
that's
alive.
really been overlooked. I think if you think about the nature of this particular name, it really, to me, has a first mover advantage. And once people start utilizing a particular technology or service, it really becomes very difficult for them to switch unless there's meaningful competition, which I can't find a equivalent competitor that makes sense here relative to dLocal. So I think there's a reason why, a good reason why the stock is higher, tremendously higher over the past week or so, but also why the stock seems to be moving nicely from the standpoint of the 6-month trends, which are improving for this name.
Couple things, George, as we look at this one. Obviously, it had a pretty substantial gap down, as we saw in that one-year chart in its November reported earnings last year. And so we're sort of making back now in this name that particular move, which I think is probably pretty important as we get back to some of those prior trading levels. One thing that you've pointed out recently is some of these names that are lesser known but have some pretty big analysts covering it. That can be important. I see Morgan Stanley, HSBC, JP Morgan, Susquehanna, Barclays, all with ratings on this name, some of which updated as recently as today. That can be seen as positive. George, do you think there's possibilities, though, that maybe this is a little bit of a short squeeze, too? I'm seeing 11% short interest.
I think so. In fact, I had 11.5% short interest on this name based on the last month's report. So, yeah, I think there's a little bit of short squeeze going on for the company. But
dLocal?
For the shorts, I think one of the reasons why they've been short is that you have to look at the emerging markets relative to the U.S. dollar. That's where I think this stock may face some headwinds. It's not necessarily company specific or maybe industry or regional specific issues. I think it's macro-centric issues, in particular the U.S. dollar. So if the U.S. dollar starts to rise, that certainly can put pressure on emerging market stocks like dLo. And maybe that's why the shorts have been in this stock. But the company is very profitable. They have 22% net income margin on a GAAP basis. So that might also cause the stock to continue to move higher and the shorts to cover.
Yeah, and Georgia, with a name like this, with such strong guidance, like you said, that maybe not necessarily like it warrants a 30% move, but the results were really strong, so we'll take that for what it is. Appreciate the thoughts and the breakdown. As always, George Tillis, Senior Markets Correspondent for the network. That also does it for Alex and myself for Next Gen Investing for this Wednesday. Coming up next, we have the watch list with Nicole Petalides.
All right, SPY. Low VWAP. Got the minutes in 4 minutes. I know what the futures, I've traded it just basically whichever direction it initially goes, just gone that direction. And then just gotten out quickly. Sometimes it just does a quick pump fake one way or the other. With options though, I don't know. I'm not as fast getting in and out of these. Isn't good. That volume today on eBay. Oh my gosh, almost $1 billion. Plus 129 million. That is neat. Gosh, you and me are the same height. That is neat. I'm glad we figured out what that was from. GME is back to VWAP. 2 minutes. Here we go. Thanks, Emperor. Yeah, appreciate the thumbs up, guys. I've forgotten to remind you, so those of you that have not been needing reminded, I appreciate your 20. Here we go. Spine's ready for it. 2 minutes, right around VWAP. Does it get leaked? No. We're gonna need a big rip for my calls from yesterday to work out. Like 445. Seconds. There's a bit of a delay on stream, so be ready right now. Well, we usually listen to Stock Market Live for this. Oh, it's out. Initial reaction's a flush. Not prepared for that. Balls on the dip. Very small move. Probably what expectations were. No, this is the whole report. The algos will go through it. Got calls. Got dip calls, sort of. Not a great dip. It's the same stuff the pals said, but sometimes they change a little bit of the wording, give more clarity, more direction. It's more concrete since it's in writing, I guess. Yeah, the FOMC, this one does take some time for the algo's going to go through all the wording and stuff, so it can get. It's not like CPI or something, where it's pretty instant on what's going on right away. Well, it's coming down some more. What did he say? Oh. Right, here's Stock Market Live. See what he's talking about.
the recession stuff. Now we're starting to drop here a little bit. That's a little bigger. It could be the reaction to the housing. I don't know. That's the only thing that I see as like a red flag. But other than that, I don't know how sensitive the markets are. Again, we're already at the low, so be careful. It's gonna be very volatile. Surprisingly, a little bit bigger of a move, but it's already chilling. Some weakening activity in Canada and Mexico. Whoa, what? Oh, I was like, dude, no way this didn't make the headlines. But no, emerging markets. So they said, in contrast, central banks of emerging markets, and then then they said rate cuts. They said some indicated a rate cut is possible at the next meeting. They're talking about emerging markets. So they knew about China. That's crazy. That's what it sounded like. I guess who else cut? India or Argentina? No, that means they knew about China. I mean, that's what it says a month ago. They said rate cuts. They said some countries, some other emerging markets indicated that they would have a rate cut possible at their next meetings.
We'll bounce on barbecue above VWAP now.
I thought Canada just didn't raise.
6%.
I thought Canada raised rates.
Or down 6% rather.
Is that why Buffett bought home builders? Maybe, but again, what they're saying though could just say a more hawkish Powell. I don't know. Let's get some more clarity. We'll see how other people take it. Wait till the bulls digest it. That's it. Because again, someone's be like, "That's a great comment." So if enough people will get behind it. But like I said, that's on the first read. I'm skimming through now. That's the only thing that stood out to me as a red flag. And then the economy updates were actually good. September, that was talking about other countries. Easily, not to mention some easing of inflationary pressures, somewhat at shorter maturities. They talk some on bank. Conditions remain accommodative with credit available for most borrowers. Credit imbalances increased. They brought up the slews. The bank reported expected to continue.
Barbecue only down 5 now.
On credit card loans.
Moved up a little bit. 2070.
So some participants observed that recent increases in home prices suggested that the sector's response to monetary policy restraint may have peaked. Hold on. They noted that consumer. I'm gonna read the paragraph of where it's from. So this is where it came from. Again, they're talking about GDP, page 7 of the minutes. Participants noted that consumer spending had recently exhibited considerable resilience, underpinned in aggregate strong household balance sheets, robust job income gains, low unemployment rate, and rising consumer confidence. Nevertheless, tight financial conditions, primarily reflecting
Not
the
gonna bounce
cumulative
yet.
effect of the committee's shift to slower growth in consumptions in the periods ahead. Participants cited other factors that were likely leading or appeared to be consistent with the slowdown in consumption, including declining stock of excess savings, softening labor market, and increased price sensitivity on the part of consumers. Some participants observed that recent increases in home prices suggested that the housing sector's response to monetary policy restraint may have peaked. So they're saying houses are, but everything else is slower. So that's a very weird way to lead that comment in too. So they're saying the response to the housing may have peaked, but also, again, they were just saying savings and other things are dwindling. No, they're saying the opposite. So they're saying although housing may have been responding and may have peaked, they're saying the other stuff has not really worked out. I guess they're trying to balance it out. They're saying, I guess they said, again, excess savings slowing down, softening labor, but then they think people and houses have chilled out.
Pretty small move, even to the downside.
Again, we're doing the same thing I told you. I told you for hours today, we're just going to go through and look for like 4 or 5 words. Some people consider it stupid analysis. Well, if you're going to criticize me for it and you didn't take it upon yourself to go take a nap like you're just a fool. You know what I'm saying? That's on you, bro. That's on you. I'll gladly read them all. I'm still skimming through it. They said softening core. Take a nap.
Okay.
That's what you're supposed to do, bro.
Thanks, Stock Market Live.
Can't get mad at me.
My pleasure.
That could be elevated, and that makes sense. Because if they keep raising rates and then we see some layoffs, unemployment will go up, right? I mean, what do you think of that scenario, and how likely is that?
Well, look, that's what their models tell them is going to happen, and so they will certainly believe what their models tell them is going to happen, and that's inside of their projections.
I mean, they're head and shoulders here for me.
The summary of economic projections they put out every quarter.
I don't like that.
In terms of like thinking what's going to happen, to the unemployment rate, given what they're doing with rates, that is sort of the natural outcome.
Let's get nuts indeed.
Models that they've got. And so I don't think that's necessarily.
Thanks, Emperor. I appreciate it, man.
But it certainly makes sense that the Fed is talking about
I
it
don't know.
As sort of an eventuality rather than something that just may end up happening.
You real G, Emperor.
The 10-year is really right around the highest that we've seen in over a decade, right? It's at 425.
Thank you, sir. Appreciate the generosity.
And everybody's watching the long end too, because
the court. Do you guys put a link for the court?
Because it's extremely
right now.
Inverted, right?
You guys link the court in Discord?
What we've seen out of yield curve recently, at least during the month of August, has been, as you correctly noted, the long end going up. The long end is going up for good reasons. The long end is not going up because of inflation fears. The long end is going up because of growth, because growth is coming in stronger. So we see that in term premiums and other things like this that we can measure sort of on the side. But if the long end were going up because long-term inflation expectations were becoming de-anchored or were going up, that would be a really bad thing.
Oof.
The long end going up, like and us plumbing these, the 4.25 rates in tens, as you said,
just making it
that's not necessarily a bad thing. I mean, that will end up coming down as we have nominal growth begin to recede as we come into the end of this year and beginning of next year. But the reasons why the long end's going up right now is actually for good reasons.
Right, understood. Let's just talk about the market for investors. I know you're watching the AI space closely. The VIX has been creeping a little bit higher. Markets have been volatile and mostly finishing down for the month of August. What do you tell investors?
Right now, Nicole, what we're telling people is we like to let into the next 6 months a lot better than we like the next 6 weeks. It's not a secret that August and September can be challenging seasonal periods. And after the run we've had so far this year, our expectation coming into August that it was probably going to be a little bit soggy, probably a little bit soft.
Anything bullish in that report?
And that's ended up happening so far. We think that as we get through September and into October and November, it'll continue to be obvious that growth in the United States is really still pretty strong, and the inflation is durably coming down, and the Fed is actually done. And so all the concerns
new low
that we
there.
had for
Wow.
much of the last year are going to be abated.
Yeah, I mean, the head and shoulders.
While we're sitting here in this sort of challenging seasonal period of August and September with really low liquidity conditions, the entire continent of Europe being on vacation essentially, and kind of senior traders not at the desk. This is the type of markets you can get these.
We set up an RSI divergence here.
Almost senseless moves. Like the move yesterday in equities was a little bit senseless to it. Didn't really make any sense given the data, given everything else that's going on. But that's August. Look, and so we're going to have to deal with that for the next few weeks. But I think if you're able to close your eyes and open them back up in a few months,
I can only close my eyes.
Happy there
I can't open them.
Oh, okay. So at this point, if you were going to say to buy sectors or specific names or have a portfolio that probably would have a winning recipe, what would definitely be in it?
We're starting to dabble a little bit in the more cyclical parts of the equity market. So, think small caps, think the more cyclical areas, like industrials, materials, things like that, energy even. These are areas that we haven't really played with all that much this year. We've been mostly focused on the mega cap tech names and sort of the large cap growth stuff. But as it becomes obvious that the U.S. is not entering a recession and will not enter a recession for the remainder of this year, those smaller parts of the market, the parts of the market that have lagged so far this year, are probably due for some catch up. It doesn't mean the Nasdaq has to go down. Doesn't mean
I feel like this guy's like 3 months late.
Have to go down. But they probably pushing the pause button here for the next few months as the rest of the market starts to catch up. And we do like the U.S. over pretty much anything.
Is this a pre-recorded from 3 months ago?
So you do like the U.S. more than internationally. I was going to ask you that about Europe because there are some folks that had been looking to Europe. What about the Magnificent Seven?
They're good companies for a reason. They make a ton of money. This is This is not your daddy's Nasdaq from the 2000 area, like when a lot of those companies didn't really make any money. This isn't these top names in the Nasdaq nowadays are the companies that make the most money in the world. They have the highest margins in the world. They have the highest revenue growth, and they're basically immune from economic circumstances if you think about it. And so there's reasons why those names trade at premiums, and we continue to like them. We just think that there probably going to be other names that need to play a little bit of catch up, as I said earlier, and we think that you'll get more bang for your buck out of those. But ignoring those Magnificent Seven, we think you do that at your own peril.
Right, understood. Okay, and just
more of a bounce on barbecue there.
And home prices,
down 4.8.
We are seeing home prices.
A little inverse head and shoulders here on the 5-minute. This thing might climb back up to that 22-cent level.
We've seen almost like rolling recession where housing came down. Things are coming down.
1890.
And so now at this point, the home price increases.
See what this court hearing does for the stock.
Down a little bit. That could be a sign of these high rates too.
You're 100% right. I mean, the countervailing force to the interest rate
GNS doing
that we have right now, like nobody wants to borrow money at 7.5%.
Yeah, let's see if we can consolidate a little more. See if we get some
so they're getting all sorts
confirmation this trend is still supported.
From builders and everything else to basically buy down mortgage rates.
Not sure I'll be so fortunate,
until
but
the rates come back down again, which they will.
Nice little double bottom there on the 50%.
For the time being, we still have a supply
in the gap
shortage,
fill.
and especially in the single-family housing space. And so that is a supportive that's a supportive construct for the overall housing market. That and the fact that everybody's got a job. And so you don't get big-time housing downturns if everybody's got a job. Everybody's getting.
I'm still building that right
raises,
shoulder, that head and shoulders. I don't know.
Locked into a long-term fixed-rate mortgage, so they're not really impacted by these very high mortgage rates right now. So that construct is confounding people. It's making it kind of a confusing setup because everybody thinks that housing prices should be collapsing with 7.5% rates, and in places like the UK and in Europe that have a lot of variable rates, that is starting to happen. But here in the U.S., most folks have a locked-in fixed-rate mortgage, and they're just not really being impacted by these 7.5% mortgage rates yet.
That's why you don't have that supply. They already have a good rate, and they're not moving. And why should
you got
they?
It.
And hold on. And if they have
Thanks,
to pay
Juice.
more to buy a new house, and they'll pay more to buy a house, the elevated prices. They'll pay more if they need a mortgage. And wait, how about property insurance? That has gone up as well. I mean, you just get the triple whammy. Scott Ladner, great to see you. Thank you. Horizon Investments. And we'll be talking more about this later this hour, in fact, because we'll be examining the home construction market, which new data shows growing
230 starts.
despite the highest mortgage rates that we've had since 2001. We'll also take a closer look at the growing role of AI in equity markets and some ETFs that you may want to have on your radar. Our panel is ready ahead.
I think calling for 1624 on GME. Yeah, I definitely could break some supports if it doesn't. The market keeps coming down. We break 18. I think 15, even more likely. Boing. I did get some calls. Got them for tomorrow though, because can't trade 0 days on Fidelity. At least they don't let me. Much of a degen, I guess. I don't know. SPY's moving up a little bit. Just a little bit. Jones up 2.6. Take RAD with you. 4.5. Be that way, RAD. SPY's moving up. Need big rip on SPY. Big rip. Very poetic. GME can go to 0. We break 15. I think 10. I got 10 on here for next major level. You don't want to look past that. Then you're starting to look at like gap fills and stuff in the single digits. Not sure what RC was thinking with his buy-in. If he was thinking that this would ignite it to just have enough momentum to squeeze past that $30 and have some kind of squeeze on it, or what? Or maybe he just did this for the people, because he definitely has people that followed the cycles, and sure still continue to look at the TA much better than probably any of us could. Or maybe he just wanted to do it for the memes of the not for long tweet. Here you go, SPY, back to VWAP. There's VWAP on SPY. Looking at an empty courtroom. Showing nothing hit the lit market. Some conspiracy. I mean, his orders do hit the lit. There's a breakup VWAP. Oh, SPY, do it. Be revealed later. Read GME's down because it acquired BBY. The 10 is strong with this one. Shows money where his mouth is. It's just last time he bought, he timed it perfectly, and he initiated the move on it. What was it right here? This time, it was just him, and then it was over. Or Larry Chang, or whoever else bought then too. A couple other insiders I think bought. Ooh, SPY. We need on these. My break even on these is 446. Yikes. Hot mic.
Audio.
Whoa.
We got a mute.
What the heck? Okay, I gotta show you guys what's going on here. That's hilarious. Is that like the...
Maybe nobody.
Sorry, because I didn't have the time for the lunch. I only have that one.
Gabriel Rostom. Who's this? See popcorn. A dry lump in your throat. Swallow that dry lump. Buck up. You're just gonna get better buying opportunities on your one and truly only favorite stock. If SPY can push through VWAP. Do it. This is the way. 230. Big high of the day push. Don't do that, Matt. I can't trade on Fidelity on the browser. It's crazy. Just like refresh to get live data. SPY. Yeah, GNS above VWAP. Nice. SPY coming down here a bit. Should have taken some profits up there. I was stupid. We'll sell half if we get back up there. They're not gonna start in 5 minutes. No one's even there. Looks like they're gonna delay it, maybe. eBet consolidating 140%. Wish I watched this thing last night. Market closed and this had nice action in the after hours. Right here would have been a nice buy on that breakout. We looked at it yesterday just because all the volume and some price action, but didn't realize yesterday closed engulfing until today. Okay, closed a couple. Come on, SPY. Do it. This is the way. Oh. 4. Let's go. Still down 95% on these calls from yesterday. Oh. BAOS is halted. Pause. The pause. RAD is down 5. Bye. Excuse me, sorry. This little double bottom there on RAD. Well, at least SPY is waking up, has some volume, it's moving around. You could tell it's just waiting for FOMC all day, even with this like very controlled inverse cup and handle and sell-off. It was like, finally it came out, now it's released. Good. That big doji up there, why you do it? That was not me. No, I'm fine. Coughing up a lung. eBay looking like it wants to break out of that bull flag.
This meeting is being recorded.
Jeez. Sorry. Their audio, I have it so low. That was crazy. Ooh. Because I told you so in history. Think I'll still be alive for that? Hey, booby! You baby. Next resistance for SPY, 4444444. Right up here, high of the day. We're getting there. I don't know if we're getting there, but that's next up. I had the volume down to 60%. That's still just blasted. He's making me sweat these calls. Oh. No, I'm good. As long as we hang out above view up, I think we'll make the move. Could take a while. Still have an hour and a half left. Nice to see the market finally woke up and making moves. Even this, yeah, even the sell-off again, it was kind of didn't have a whole lot of conviction. I'm like, I don't think so. I turned bearish on GME. As far as like a trade, long term, I think it's still a fine investment. That hasn't changed. The NFT thing and all that, like maybe it's a bit early, bad macro environment for that, which kind of always knew, I guess. I think there's definitely a use case for it, and it could still do really well. Them getting rid of their wallet kind of sucks, I guess, but it makes sense with the SEC. But yeah, it's not fun anymore since it doesn't have its cycles. Not fun to trade. So, I think the short position, the risk, the obligations on it have probably been unwound at this point after the 2 years of them pumping and dumping it for liquidity to unwind. And so that's where I kind of lost some of the interest in it as a trade once it stopped doing that. It could still be there, just hidden above a higher price, like over 30 bucks. We don't know that though. Spike. Do it. Do it. I do not like trading on this fidelity. I got out of the rest of those calls.
All right.
Hey, little profit. Oh, did I?
Are we ready?
Why?
Okay. Good afternoon. It is Thursday, August 16th, 2023. This is the United States Bankruptcy Court for the District of New Jersey, and we are here on the omnibus hearing date in the Bed Bath & Beyond matters 23-13359. An amended notice of agenda was filed this morning, and I guess there's just a few matters that are going to be dealt with today, and most of them seem to be uncontested or withdrawn. So maybe I will ask counsel for the debtor to get us started and make his or her appearance.
Great. Thank you, Your Honor. Ross Fiedler of Kirkland & Ellis on behalf of the debtors.
Oh,
Can you hear me all right?
It's a little strange, but so far so good.
Okay. Well, let me know if you can't hear me. I'm joined by my partner, Emily Geyer, my colleague, Mr. Friedman, and co-counsel David Bass from Cole Schatz. Happy to proceed unless you'd like to take notice of appearance from anyone else.
Okay. Let's get started.
Okay, great. Well, as you noted, we filed a revised agenda at docket number 1900. Just a few matters going forward today. Should be a relatively quick agenda, all, as you mentioned, on an uncontested consensual basis. There was agenda item 2. We have agreed with the movement to treat that as a administrative expense proof of claim, and that will be handled as part of the claims reconciliation process. And then there was a motion for relief from stay, which is noted on the adjourned matters section, which is being pushed to August 29. Did want to thank Your Honor for accommodating us via Zoom today, given the relatively short agenda, but I'll just turn it over to my colleague, Mr. Friedman, who will walk the court through the rest of the agenda.
Okay. Is there, before, I'm not sure if this is Mr. Friedman that's going to handle this, Mr. Fiedler, but on the on matter 2, the request of ARC and then various initials and things, is there any dispute or objection to having by the requesters to having the matter withdrawn?
No, we've agreed with the movement that will not go forward, and we will treat that request as a proof of claim, and it will be handled as part of the claims reconciliation process.
No, I understand. It just says the debtors have requested, and it didn't say that the debtors and the requesters have requested. But so you just confirmed that. So that'll be withdrawn on the docket.
Thank you, Your Honor.
Thank you. 1445. Okay, Mr. Friedman.
Good afternoon, Your Honor. Max Friedman from Kirkland & Ellis on behalf of the debtors. Can you hear me okay?
Yes, fine.
Okay, perfect. So I think we'll start with the first item on the agenda, which is the debtor's 365 D4 extension motion, by which the debtors seek an additional 90 days to assume or reject leases of non-residential real property. The motion is uncontested, and the debtors have filed a certificate of no objection at docket 1877. I don't know if you have any questions for us or.
Well, even though it's captioned as to reject unexpired leases, it really applies to contracts as well.
That's right.
Yeah, is that right?
Yeah, I believe so. Although non-residential real property is what's subject to the 120-day cap in Section 365 of the Bankruptcy Code. So we're seeking the additional 90 days for that.
All right. Well, I thought it said contracts in there as well, but maybe I missed it. In any event, there's certainly cause shown, and there were no objections filed, and the service was good, and it's fine with me to extend that time for cause, as set forth in the moving papers.
Okay, perfect. Thank you very much, Your Honor. We appreciate that. And then my colleague, Mr. Fiedler, addressed item number 2, so we'll skip ahead to item number 3, which is the debtor's motion to reject 24 unexpired leases of non-residential real property. We're going to go forward as to 22 of those today. 2 of those leases, the Paramus, New Jersey lease with IKEA and the Dallas lease with Nordstrom, we are adjourning to August 30th. So we would only be moving forward today on those 22 leases, which are uncontested.
Okay.
We think rejection is important at this phase of the wind down. A DIP milestone requires us to have rejected and finished our store closing sales by July 31st. And so we think that the relief is important today.
All right. Does anyone wish to be heard on that? Having heard no response, I also that we entered an order shortening time on that, and it's it's in the debtor's business judgment. And as to the 2 that there were issues, it's been adjourned to August 30th, which if I'm recalling right, is also the date for the Michaels hearing. Is that correct?
That's correct, Your Honor. Shaping up to be a fun day for the court.
Okay. You think we can do that all in one day? All right, that's fine. And so I will enter that order as well for cause shown as set forth in the application.
Okay, thank you, Your Honor.
All right. And then.
Okay, and I think the 4th item on the agenda today is a motion requesting redaction filed by Mr. Rostrom and Mr. Das.
Right. Okay, and I understand that they or one of them is appearing, and I have the application for redaction that was filed at docket number 1729, and it refers to a document that is as to which these individuals are requesting redaction of personal information. But I looked at the document, and I'm unclear as to what personal information, personally identifiable information, is being referred to. So if Mr. Das or Mr. Rostam could just appear and tell me what it is that they are seeking to redact.
Good afternoon, Your Honor. This is Nilay Das. We are requesting a redaction of our address and phone number and the email address information that got exposed in docket 1728 when it was docketed for a short while. And we have been, at least I've been getting some calls from private numbers or unknown numbers. They don't leave any voicemail. So we would like that information to be redacted.
Leave the man alone.
Protect our privacy and to protect us, basically.
Well, sir, though, you see, personally identifiable information, any things that filed with the bankruptcy court is presumed to be publicly available for inspection, and you have to show that it's a trade secret or confidential research development, or commercial information, or contains scandalous or defamatory matter. And I'm not sure. It certainly wasn't clear to me from the application what you were requesting be redacted, because I went through the
You bet, selling off.
the
As far as
docket
no
number
halted.
1728, and I didn't see anything that looked confidential to me. It looked like a lot of information that you were willfully disclosing,
We'll
and
dip by there if you
some
want
of it or all of it may be public. But besides that kind of legal issue, if you were intending to appear in this case, your contact information is necessary and appropriate, because people may need to get in contact with you, and there's nothing that I know that's confidential about it.
Your Honor, we are just requesting that because this is a high-profile case, and the issues that we are raising related to the borrowing of common equity shares, which is company property, that affect a lot of hedge funds who hold such shares.
What?
So just for the protection of our privacy, we are requesting that, and this is just the personal identifier information which is there in the which is revealed there in the docket that we are requesting. And I have already provided a redacted version of the document with the personal identifier information redacted. I have sent that along with the money order requested for the redaction fee.
Well, that's what I was going to ask you to do.
Who is this guy?
Was to tell me and submit a clean copy to Chambers and well, I mean, actually you have to submit it for a request for sealing on the docket, and also a redacted, what you propose to file on a redacted basis, or file it on a redacted basis. But I'm just telling you in advance, I don't see any confidential or proprietary information.
Geez, charge point broke that low.
Name and address and contact information.
Yeah, it's just the personal identifier information that we would look at redacted. I mean, yeah, sorry?
I'm sorry, I didn't hear. You said just the, what do you want redacted?
Just the personal identifier information of our address, mailing address, and this is the personal mailing address and the email address and the phone number.
Yeah, but I'm saying to you, I'm saying to you that there's nothing confidential about those phone numbers, and that I'm aware of, and you didn't provide me with anything. You see, what I was trying to say to you is that there's a presumption that everything, all the information that's filed with the bankruptcy court is publicly available, because there's a policy in favor of full and open disclosure of that information. And it makes sense, because you want people to be able to see. It's supposed to be a transparent process, and want everyone to have equal access to the information. And then that's the legal thing aspect of it. And as I said before, you have to show that it's confidential, proprietary information, scandalous, defamatory, which none of what you said so far falls into those categories. But I'm willing to consider it if you want to make an application that tells me exactly what it is that you're seeking to redact, and what the basis for it is. But just putting aside the legal aspect of that, sir, the practical aspect of it is that you're not represented by counsel. As far as I could tell, you're proceeding on your own pro se, and there may be a need for people to get in contact with you, including the court, and that information is necessary. So I'm telling you in advance that I'm very unlikely to redact your addresses and phone numbers and things of that nature.
Your Honor, so can we request the filing to be under seal, as you just mentioned?
Can we just, what? I'm sorry?
Can we request the filing to be under seal? File under
File-
seal.
Under seal, you could, I'm saying that you see, if it's filed under seal, no one can see it.
So we have sent the unredacted version already. I have mailed that already, and it has been delivered to the court.
Yeah, because there's an unredacted version that was filed with the court, but is currently completely under seal. And you know, that's just the court process. All of it is shielded from public view at the moment because you filed the request for sealing. And then you
Oh,
also
you think that's
requested
life?
this hearing. And now we're having the hearing, and I'm trying to explain to you that it's kind of the opposite of what's being
I don't think that's life
suggested.
relationship.
Almost nothing should be sealed, and everything should be publicly available.
All right, Your Honor. As per the procedures of Federal Bankruptcy Procedure 9037, we have provided the version where this personal identifier information is.
Oh, I didn't mean to out him.
And
I don't have that. Do we have that, Ron?
I have already. It has already been delivered to the court as of a couple of days back.
Well, we don't have it. So maybe when you submit something else, then you can.
I mean,
you
it's a
can
pretty
tell me
common
what you think.
voice.
Again, and I'll refer you to, Sturt, you sound like a very intelligent person. I'll refer you to 11 USC 107 and Federal Bankruptcy Rule 9018. And basically, 107A says a paper filed in a bankruptcy case and on the docket are public records and open to inspection by the public. So that's essentially what it says. And then there are limited exceptions in B and C that you would have to fall under for the sealing. Okay?
All right, Your Honor. So we will file the appropriate application to file it under seal, and also we have already sent the version which has the personal identifier information redacted. So so if that is sufficient for this, that can be displayed on the docket.
Yeah, the only thing is that today in particular, right, today for this day, the only request for sealing that I have is with respect to the document that was initially filed as 1728 on the docket, and it's your Bed Bath & Beyond Common Equity Holders Limited Objection that was apparently sent to the trustee's office on July 31st. And they sent us over a copy the morning of the August 1st for the hearing that was on that motion for the conditional approval of the disclosure statement. And that entire document is sealed right now. And that's what's before me at the moment. You're talking about other documents now, which would be the subject of other applications. But for this document, I need to know what it is that you're saying, besides your phone number and address, what it is that is confidential business information or scandalous or defamatory.
Your Honor, it's I am also referring to that same docket 1728, and that is the document that I had emailed to case admin, and that's how it was docketed. And what I'm requesting is just our phone number, address, and address and email address information that may be defamatory to us. I mean, if someone tries to basically
harass.
Listen, sir, I'm sorry. I've said it several times so far, sir. I don't consider your address when you're filing objections. I don't consider your address and phone number to be confidential information. I'm trying to. I've said it several times, and you haven't told me it's confidential. Why it's confidential yet?
You should use a PO box.
I don't think it is. That's the problem. Why you don't, you know.
Too bad.
I'll give you, you know what I'll give you, sir, just to get it, to get this done. If you want, I will ask the clerk's office to delete either your telephone number or your email, provided that you indicate you're willing to accept communications by the one that you pick to leave on there. Okay?
Right. Just to be clear, the communications by what, Your Honor?
What's that?
Communications. You mentioned communications by the one that I would like to that we would like to leave on there. We would like to leave our name on there, and so anything else we need to leave on there?
I said, I'm saying the people, you are filing objections. In this process, there's a need. First of all,
Not a
you
good
haven't
look.
shown any of this is confidential or entitled to be sealed. I'm giving you just a small window. I'm giving you a break. I don't know how, whatever you want to call it. I'm just telling you that I'm willing to take off either your phone number or your email, but not your address, in order to, but only if you tell me that you are willing to accept any communications and respond to any communications by the one that you pick. For example, if you pick email, that means that you're agreeing that that's the proper way to contact you. Okay?
Yeah, sure.
Okay.
Sure. So yeah, we can provide our. I mean, I can provide my email or a PO box PO box address. That would be confidential enough for me. So I can let the court know about that.
But I have an email for you right here. It's right here.
Yeah, sure, Your Honor. But I would rather use a PO box mailing address for the communication. Is that acceptable?
All right. Why don't you just submit the one? Just tell Mr. Filgaris, you and Mr. Ronson, just tell Mr. Filgaris which email address you want to use, and we'll put that on the caption and redact the phone number. Okay?
Okay. Sounds good.
Actually, it's much better if you send the first page and whatever page you want to be redacted with the exact information that you want. Yeah, so we know exactly what you're saying you want redacted, okay?
Sure, Your Honor.
All right. Okay. Thank you, sir.
Thank you, Your Honor.
Thank you.
Yeah. Okay, that was Mr. Rostrom. All right. So from that, I take it that you're both choosing to leave in your email address, which you're going to provide to us, and perhaps a different address for service of papers, physical address. Is that right? Mr. Das?
Yeah, that's right, Your Honor.
Yeah, but can you please do that by no later than Friday? Okay.
Yeah, sure.
Okay, Mr. Rostam?
Yes, thank you.
Thank you. All right, I think that covers it for today.
It does, Your Honor, and thank you.
Thank you. Have a good afternoon, everyone. Unless someone has anything else, is there anything else to cover?
What? Thank you, Your Honor.
Thank you. Bye-bye.
Bye.
Bye-bye.
Wait, was that whole thing for his address? Oh my gosh. Was it really? He didn't even have anything to say about his appeal or whatever? It was just about taking his address off there? Was that what the entire... did they do anything else? Holy crap. What else did they do? Oh, dude, someone needs to reach out to, if that is life. Need to help him. Just feel for him. You bet. Back to BWAP. Spy coming down some more. I mean, he totally outed himself now that he's been on the Zoom. Now we know exactly who he is. Did they do anything else? I don't understand. Like in the beginning, seems like something else happened, but maybe not. Maybe that was all for him. Joan with a little pop. Rad not so lucky. We'll pop on the 50. Why were all those other people even there if it was just for him? I know, that's why I feel for him, Killers. He got a little, yeah, that's too bad. Was that literally the only thing that was on the docket today? I thought this was like a big court hearing about something. Huh. Well, thanks guys for joining. Thanks for your support. That was very interesting. 23 likes on the stream. Not bad. I think we just heard a barbecue court hearing about removing redacting information. And maybe that was it. Little inverse head and shoulders there on the 5 minute on it. Still in a downtrend though. This one. Thanks, Kevin. It's common knowledge of its life. I mean, I guess I didn't assume he'd be able to call in. But I guess since he's submitted whatever he submitted, it's giving them that ability. Yeah, a little inverse head and shoulders on GNS also. Looks good. I'm scared to get back in. I don't know why. I shouldn't be. I'll grab some more. I didn't get the 50% bounce, but that's okay. I didn't really want that. I didn't really want to dip by it. I wanted the momentum. And we've got it. Oh no, that's right. I was gonna wait for tomorrow. I'm not gonna do it yet. Wait for tomorrow. Because he's speaking to them. I mean, it could be bullish. I don't know. We'll see. I don't want exposure for it though. What color tie he likes to wear. Whew. Well, it's power hour, 10 minutes in. It's buy. Tested VWAP. Now back down, and we are still kind of under the trend, so might be a red rest of the week. Like a pretty big break today.
in some of these names. The news out of China, the economic data strong here in the U.S. is kind of putting traders on their heels a little bit on whether
testing the lows.
They have what it takes to carry this market further, at least in the near future. Not a lot of, I think NVIDIA's earnings next week, Oliver, are enormous in terms of re-energizing this market, or the opposite on the downside, obviously, if that happens. But right now, I think we're stuck in a bit of a malaise.
Broke that resistance.
The economic data is coming in slightly stronger. I expect Jerome Powell to address that next week in Jackson Hole, and this market's just having trouble
Rewarding your dip buyers. Just be careful with tomorrow again.
Doesn't stay around very long.
I don't know when. Let me look up, see if figure out when he's.
Yeah, it's a good way to describe it.
Is it George
heavy,
Hamilton?
right? We just kind of sink if the news isn't perfect. Yeah. Okay. Now there is some news. We've got actually a little bit of merger discussion to have here, I think, as we
Roger
a
Hamilton.
couple stocks. Intel down 3% is certainly not helping the market, Renita. It hasn't been a hero by any means, but it doesn't help when you have a major chip company continuing to stumble basically with every
8
step.
Pacific time.
And it's down because of its failed acquisition of Tower Semiconductor, an Israeli chip maker. Now, while the two did mutually agree to discontinue that $5 billion acquisition, it came only after Chinese lawmakers, Chinese regulators refused to
I'll just share this tweet on Discord.
Now, initially, they entered into this agreement in February of last year, and August 15th was the deadline. So now Intel will pay Tower a reverse termination fee of $353 million. Now for Intel, this complicates
I'll put it under Twitter
efforts. Now Tower was supposed to handle the contract production of older generation
There's
chips.
a link to his tweet about
going to
invest me tomorrow.
Or build up its own contract chip making business around the more advanced chip manufacturing. And so
his tweet
if
says
Intel would have been able to buy Tower, that would
8
have
a.m.
significantly
Pacific, right?
brought
PT,
that to
and
fruition,
this is
right?
Eastern.
But there's a larger implication from this failed acquisition. Now, the fact that Chinese regulators failed to approve
And new senior appointments, new partnerships,
showed
Genius
just
developments,
how much
states
the
and URL, spin-off and
US-China
timing,
trade
acquisition activity,
tension,
legal update, Q&A.
those are disrupting plans.
Yeah, we'll
for
see if
some
we
of
add
these
some
American
volatility
companies.
tomorrow.
And
I
because
don't
of the
know what's going to be
timing,
though.
This
Those are two
definitely
totally different
shows
times.
Through. It comes after the White House applied pressure on
Let me see if there's an
China's
answer in there.
chip industry. So it's hard to tell what more
Oh,
can
he
come
corrected
out
it.
of this type of situation. But for now,
It is Eastern time.
we know that this acquisition will not happen.
It's Eastern time.
Yeah, and
His
paying
tweet
up
was.
for that.
You can't edit his
step.
tweet. Can you edit that as
And
a
pretty sensitive
checkmarked
company generally
Twitter
over the last
user?
year as it's fallen
It's why
behind
coming
some
down
of its
more. Too
major
low.
peers and the big growth.
So it's
potential
pre-market,
of
so
and others not
you
finding
might-
its way into the Intel story, but it still has
You might
been up and it
consider
still has rallied, and that's where I do
opening
think
or closing
it matters
position
here,
before
Kevin,
market.
because
Dang, that
ultimately,
spy's dumb.
This market, as you put it, needs something good from the tech space
Blushing.
in particular, because valuations have moved up, and I feel like this move in Intel gives us a reason to keep our eye open for basically any imperfect
I'm gonna
news.
clear
in
out the
group.
rest of my
Maybe
Tesla
we
shares.
have been priced to perfection, as they say in this rally.
Yeah, I think if you're this sector of the U.S. economy and you're looking for Intel as the catalyst for going forward, you may be setting yourself up for some
market's ready for its
disappointment
next
there,
leg down, I
because
think.
I don't know, even though the size
That was a pretty big
and
channel break.
the sheer scale of what Intel offers, not sure they have the chops right now, like
Wish
NVIDIA and AMD
I didn't trade so
does
much
to
this morning.
to get to the next level. And
Nice
in
head
the
and
history
shoulders
of
up here.
Intel, that's been
Let's break
dealing
it
with a lot
below.
of bad news lately. This is just another
Alright, no more trading
ding in the
morning.
armor of Intel. They got to pay $353 million breakup for the deal. That's not great. And the stock is heavy based on this, but this is just another attempt at Intel to get relevant that's failing. Oliver.
Still holding puts? Oh, you got just new ones.
I have to say too.
That's right, you got
said
into new
this
ones at
morning
VWAP.
as
Well done.
I feel like at a certain point the market's gonna
New lottos.
really have to
No stop losses. No surrender.
You're more than likely going to run into some extreme resistance. Thanks, Kevin and Renita. Let's,
Barbecue only down
talk with
4%.
Dane Kirsch this afternoon. Have options at Piper Sandler, who's got some China and commodity moves on his mind. So Intel's deal doesn't go through, but the bigger concern with China has been less so about
I don't know,
regulation
Kyle.
lately, Danny, and it's been more so about just growth
I don't know.
in general.
BBIG's
How are
fate.
you viewing this? What role does it play in an otherwise surprisingly good economic backdrop here, where we keep ratcheting up GDP expectations, but in China they keep ratcheting them down?
Yeah, and let's not forget they also decided to not give out unemployment information amongst the youth. It just seems like they're trying to, the black box is getting a darker shade of black, and there's less information you're getting. It's clearly slowing. There's actually deflation. The data keeps coming in softer than expected, and this overall, I think there was a lot of hype, a lot of excitement that perhaps there were some green shoots coming over the last few weeks, and then we see that data's been terrible, not enough stimulus. You have Country Garden, the real estate issues haven't gone away. This bubble that's been built for the years and years and years, it's also harder to pop, right? The CNH now, I think it's 730 versus the dollar.
That's
in
a
2015,
big flush.
which I think is an okay comp to what's going on because they're doing this surprise rate cuts overnight. The CNH was around $6, so there's just less room.
I guess I could have traded on the other account. I'm trying not to break that rule.
Weaken the currency, and last time that
I
happened,
did trade the
2015,
calls
if you remember,
though on it. Made a
the
little
S&P
bit.
sold off around 15% over the course of the next month and a half, and then we had this
Be more
huge
disciplined on
global
my
slowdown.
small account.
And perhaps that's what we're seeing. It sort of got that vibe yesterday. You had that, or 2 days ago rather,
Wasn't
when
my
there was
trade
the
to have.
surprise cut overnight, currency weakened more. You have horrible eco data coming in. You've got this deflationary environment. But the difference is this time there's less levers to pull than there was last time. That's not to say there won't, but the currency continues to weaken, and we know that the stronger dollar is bad for everyone.
The dollar right now seems to be moving with rates. Is the trade then to bet that China will stoke their economic situation through some stimulus, as they did with that kind of mini rate cut this week? Would that add then to the potential for rates to lift off?
Perhaps. I'd say the issue is that betting on that the last few weeks, you continue to lose money. If anything, like what we've seen on this marginal sell-off in the U.S., larger sell-off in expensive tech, larger sell-off in China, is that volatility has not reacted yet. So if you want to get long China, if you think it's the time to buy, this is what I'll say. Options have not gotten much more expensive on an implied volatility basis throughout this sell-off anywhere. It's almost like the market's been very comfortable drawing back this give back, even like something like an ARC that's down, I think 17% this month. If you looked at implied volatility only, you would think the ARC was flat this month. And FXI, the China ETF is sort of the same deal. So to me, it's like if you want to take a shot in China, I almost think you should be buying like 1 month straddles in case this gets a little more unruly. Because if it keeps going down, you know that you're going to get a vol pickup. And if we rally, it's going to be big. It's not going to be a 15 bip move from here. So to me, it's like this thing's been selling off pretty aggressively since August started. If you're bullish, you could buy calls, but I think you're just better off buying straddles because you're not really paying up relative to what they cost 2 weeks ago before the sell-off started.
So the market hasn't quite priced the risks that you see. So then buying puts is the move?
No, I'd say buy calls and puts, buy straddles. I just don't think there's a lot of price.
So just bet on a big move.
It just seems like as we sell off, and this is happening in the broader market as well, people are monetizing puts, they're rolling puts lower, and perhaps it's just because it's a low realized volatility sell-off. And this is just looking at the cost of an S&P put spread, but again, S&P is what, 2-3% off the highs. It's not huge, but it's not really gotten more expensive to hedge. If anything, it's about the same as it was. It's about as low as it's been since COVID. It's not that's this whole takeaway here is that I don't remember a time where we just sell off every day. Now S&P is maybe not the best example, but in something like an ARC that is down, it's almost in a bear market territory this month. You just don't see any sort of fall explosion, and I think that's the cathartic moment you're sort of looking for. Perhaps that we get a rally. Perhaps that's the end of this sort of slog lower, but it almost has a little bit of 2021 vibe too, where it's like you wanted to be short the market and short puts actually on the way down, and then eventually perhaps something breaks and you get that bigger vol push. But something like China, something like ARC, something that's a little more volatile typically, implied volatility is still very low there, and even in the S&P, if you want to hedge, it's like it's just
yeah. Well done, Bubba.
It's just very inexpensive relative to how much we started to move.
I don't
right.
with
So
zero
not
risk
even really
management though. I
direction,
can't
just,
imagine that's going to
assuming
last
that,
very long.
You know, the vol's going to pick up basically, and I mean, right now I'm watching bonds just continue to drop throughout the day. Dollar keeps going higher, so it seems like the volatility is certainly in those assets.
Forcing yourself to be right on every trade.
I think you did a nice. I think you did a nice job of highlighting like things about to break. Like if the 10-year breaks out of this range to the upside, that's when you start to see, I think, equity volatility take off as well, and people start really figuring out if they want to own expensive tech or long duration assets, especially when the alternative, which is getting more and more interesting, is now whatever, a 10-year bond that yields 4% or a T-bill that's yielding 5.25, 5.5. It's like that
Flashy
becomes
flash
much
on
more
SPY.
interesting, especially when you're already sitting on, I think the S&P's up 14, 15% this year. It's like people start, I think, would have a hard time exiting out of their plus 15% year and moving to something safer where they can get a risk-free 2.5%, 3% for the rest of the year. So it's like, I think that could be that moment if we get, next week we have Jackson Hole. If that's a hawkish push, do you remember last year right after Jackson Hole, we had that very short speech, market proceeded to sell off 17% over the next 6 weeks. We could see that moment next week, and there's nothing priced in. It's a little odd to me. It's like this is a great time to be using options, and if you're bullish, if you think, well, they'll actually be dovish at Jackson Hole, again, this is something we talked about last time. It's just very inexpensive to replace long deltas with calls or to hedge, your long.
Look at RAD, dude, down 7%.
Right. Bingo. Trade and message received. Danny, thanks for the explanation, and always appreciate the insights into what you see. Very interesting.
Got plenty of time in the contracts. It's just stupid. They're reloaded.
Not necessarily bearish, but certainly
gotta get back into hot potato on
but otherwise, just bet the
long options.
Picks up, regardless where we go. Coming up, let's talk some more earnings, data, and retail as it connects to the consumer.
AMC is only down 1 1/4. That's interesting.
Sales. And Target's number wasn't exactly a beauty, probably far from it, but the shares have been all right throughout the day, losing some of their momentum early, but still up. We'll go back to take a look at that number.
Top's down 14.
Walmart ahead of us.
That's a flush. Jolene. HE up 11.5. The Jolene. Where will the market bounce?
just a little bit of good news to drive the shares. If this was any other retailer, probably would have been down 9–10% today. There was nothing, very little in this quarter that was good. Lowered guidance, down 9%. E-commerce comp declined over 10%. But the only thing I could point to was better margins. And I think what's important to understand is that an earnings report.
Little consolidation here on GNS.
On how good or bad the analysts were at getting the numbers.
Might try and watch that
analysts were looking
live stream in the morning.
A bigger guide down, and that's why we're getting a slight pop in the shares today.
Okay.
We'll have to register.
Something even worse. Then maybe you're a little relieved.
Oh, registering.
Walmart, obviously, it's going to be the exact opposite coming into this at records.
Just
Where do you think
the
retail sales data lines up with the company data, the corporate earnings? Because the print from the economy generally this week was quite strong. But then it looks like stock by stock, it totally kind of depends on how expensive your products are, how well you've managed your inventory, whether or not you got security to keep people from stealing your stuff.
I think it's just like any other industry. There are good companies, there are bad companies. There's some people that can manage their inventories well, understand what the consumer is doing, where they're going, and they do a good job.
The chat's already getting some hype.
Great numbers from a company like TJX. They blew it out of the park, and not surprising, they're at a 52-week high today. I don't know what we can glean from Target. I think probably the elephant.
Last time Roger spoke, when the price was at a low, it ran from 30 cents to $8. Lots of FUD, including investor plays calling GNS bad investment. Don't let us down, Roger, on the spin-off of possible new merger.
Does it seem
yes,
like
because the
we
stock
need
price
to have
is
a new story to latch
totally in
on
his
to, or
power.
Can we just hang around until NVIDIA next week?
You know, you were talking about it earlier. It's not in the numbers right now. It's what's happening in the bond market. That's the story. And it's not even about
I'll be watching it in the morning.
We're very focused
I
on the
should
short end of
remember.
the curve. The problems are
Pretty
the
early
long end of the curve.
live stream.
All of this malaise
Trying to get it out
really
before
started
market, I guess.
a few weeks ago with the Bank of Japan. What they did shocked, the global fixed income markets. Then we had the Fitch downgrade, which in itself wasn't that bad because they're the game they couldn't shoot straight. They want some food on their plate, and that's pushing yields higher.
Okay. As that happens, are valuations going to get revisited? Is it just natural then that we should be expecting some of the froth to come off the top here, even if a company like NVIDIA blows it out of the water?
Some of it's already come off. I mean, a lot of these stocks are off their highs at this point. I think we have a driving force right now in the market, and that's, of course, AI. NVIDIA is at the center of that. But I think we're too focused on NVIDIA, Microsoft, and some of the more expensive names. The biggest beneficiaries of AI are going to be the hundreds, if not thousands, of companies that use it to enhance their top and bottom line. There are a lot of industrial companies out there that are, revolutionizing what they're doing. And I think it's going to change the entire industrial complex. I'm pretty bullish about the future, but we got this issue with global fixed income rates right now that we got to get through.
All right. Consumer-wise, David, it seems like the biggest bear case we hear is about credit card debt. I'm curious what you think about that, and if that's something that then also gets exacerbated.
We have an inverse cup and handle here too.
Yeah, it's not good, and it's not just the consumer's credit card; it's the government's credit card. I think one of the things that's driving
just shorter
these
time frame
rates
stuff, though.
is they're starting to look at the ballooning debt. In the first 10 months of this year, the fiscal trade deficit hit $1.6 trillion. That's pretty draconian. We're going to have to get our spending together, and I think that's not being lost on equity markets as well. We have a spending problem right now, and I think that's for the consumer as well.
All right, well said, David. Good combo. Nice addition to our discussion here. David Nelson, Bell Point Asset Management. When we come back, we'll trade Target. That's in the list of the options corner today, including UPS as well. I guess stuff's got to get delivered once you buy it. And Discover, speaking of that credit leverage. All right, good macro discussion to kick off this show. Let's do some trading when we come back.
Spy bear flagging. 30 minutes to go. We're gonna get another flush here. Oh, or not. Let's see. Bear flag broke. Climbing back up.
at the same time, Oliver, if you looked over this report and, we talked about this on Fast Market, I just didn't see any bright spots. I mean, even the CEO was pretty dour about the outlook. They lowered their guidance for fiscal year 23. They beat on EPS, missed pretty soundly, nearly nearly $1 billion on revenue in there, and inventory was 17% lower than last year, but that was already overstated on inventory levels from last year, so they're still making cuts there to inventories. This wasn't a good report. I think this is a dead cat bounce because the stock yesterday was at 3-year lows going into this report. So is this a kitchen sink quarter? Is this the bottoming cycle for Target, where anything that comes out now is going to be better than comparables moving forward? But that being said, there were some call buyers in here too. Out in the October, the 145 strike calls, trader bought over 10,000 of those. Average debit of $1.26, so he's already in some pain here because those are trading under $1 already. That break even for this trader, 146.26 over the next 65 days, 14% above the current share price in there, and call volume about 4 times normal daily average volume. I think a lot of people getting excited because this stock traded a lot higher after the report in off hours trading, so it's come in quite a bit, only up about 2.5%. Last time this stock was above 145, Oliver, that was in mid-May. So big jump here needed from this trader buying some upside calls in October. The only caveat is that he's got duration in. He's got over 2 months in this position for Target to recover.
Okay, so this one to me is kind of a little bit more, I guess,
Compares the lasers.
Perhaps because we held that low for Target, whereas the
you still have calls?
Trade is more just kind of like, all right, let me fade this giant sell-off that keeps getting worse. So definitely more against the grain there. All right, UPS, the goods get delivered. Someone here fading strength, selling upside or selling downside?
They're selling downside to take a bullish stance, but you know what? This is one of those strategies I think you and I talk about. Whenever I see pullbacks in the market, and maybe this is a much-needed correction. I don't think it's the start of a bear market by any means, but UPS is now negative on the year, down over 1% today, about 1.4%. The earnings beat Q2 a couple weeks ago was modest, despite the softer macroeconomic environment. More volume dispersions than expected due to the Teamsters contract.
Yeah, definitely.
And
A little
we're gonna get some
volatility
clarity on what they're going to have to pay for these employees, Oliver. And I don't know, in this type of environment with slower growth expected, it's probably not a positive for margins moving forward. If you expect a decline in domestic package volumes this quarter, which is their slowest quarter before the ramp up in the holiday shopping season, that's probably going to be a bright spot. Do they get to raise prices as they typically do in December or January? We'll have to wait and see on that. They'll probably have to, or unless their margins are going to get squeezed pretty robustly this holiday shopping season. But this is a strategy that kind of stuck out to me that I think a lot of people should be doing. If you see a stock like Discover, or in this case UPS, that's under pressure now, down 1% on the year. It's severely underperforming the major indices, where they're selling out of the money puts to the downside to take advantage of the higher volatility levels we've got and giving yourself a cushion to the downside. So the one that stuck out to me today, somebody came in and sold 10,000 of the 160 strike puts out in October, collected just under $2 credit. So that break even just above 158 is about 8% below the current share price in there. So you're giving yourself that cushion. It's neutral to bullish. You've got 2 months in this position, but it does give you that cushion, Oliver, so you're giving yourself a better probability of success. So this trader either wants to keep that nearly $2 in credit that he's collecting, or if the stock does continue to move lower,
158 million in capital he's tying up with that.
Break even, which you see there, which is about 158. So yeah, two ways that you can look at this type of trade, but maybe not a bad idea in this type of environment.
A lot of people stepping in front of, I don't know if they're trains or what, but they're stepping in front of some serious momentum. UPS rolling over since earnings, Discover getting just walloped. So, I mean, all these, even Target with the bounce today is like, how long is that going to last? But again, I feel like that one at least has some technicals behind it. The other ones are betting that these drops are going to be short term. Thanks, Tom.
Yeah.
All right. Interesting. Bulls in the options market taking a stab at some declining shares. Jenny's going to come with a golf story in a second here. And it's a pretty interesting one. A little overlooked action, perhaps, in a IPO that is giving some back because of a putter.
What? Jenny? Morning bull flag went rogue. Did go rogue. Yep, I got caught in it. I had a nice put here, but then I actually went long here, open for that, and then stopped myself out pretty quick. But all those trades, all those stop outs add up. Then I didn't want to do extra trades, but yeah, inverse cup. That handle was kind of messy, but I actually did get puts on that handle somewhere around here. So caught that guy. Actually, I think I held. Did I hold? Yeah, I held and added here. That's right. That's how I was green on the day. I just held from here though. VWAP. I just don't like trading through VWAP. It's always so choppy and scary. Yeah, that's right. This is the one I added on. That worked out pretty well. For that huge move right there, I totally that trades for on the VWAP retest. Well, green on the day. It rains, it pours. You hear the rain? HE halted again? What the heck? HE's halted to the downside? Dude, this thing's crazy. What's up with this halt? Let's come down a little more here. We've got 15 minutes left.
As Kava Group, which we did discuss that IPO pretty heavily when they debuted. So I think at least this signals the fact that we'll be able to discuss IPOs again. That gets me more excited. This company has a $72 million market value, which actually dwarfs its 190,000 worth of sales last year. When you compare this to, say, Topgolf's Callaway Golf, that was valued at around $3.1 billion as of Tuesday's close, and it brought in around $4 billion in its annual revenue. So this company is tiny. It's based out of California. Again, it does have golf putters that are relatively, I thought, expensive. My dad said that super luxury golf putters are more like $700. We do also know they sell blades that start at around $350. They range all the way to $480. They also sell gear and bags, and they did actually recently open, or back in April of 2022, they opened this manufacturing facility out of Missouri to expand some of their footprint into different types of gear. So all in all, I was reading about the different ways that they promise that these putters will increase your golf game. They did say that 56% of golfers that use their putters saw a better percentage-wise. They also said that we did see the percentages for golfers increase from 39 to 62% when using their putters, and they made an improvement in speed variability by 27%. I don't necessarily know if I can buy into that hype, but maybe you should consider buying one of these putters.
Yeah, I think I'll go ahead and pass. Once I learn how to putt, maybe I'll spend $500 on one. But a nice little report for some volatility in this market for IPOs. Big up, big down. All right, so Saks Parente, yeah, pretty compelling marketing, though, on their website, I gotta say. Those are some pretty putters. They look like what I imagine like Donald Trump uses when he golfs. They're like gold, and there's like layers, or there's like gold flakes like coming off of it with every putt. So, okay.
I was looking at the exact same thing.
Right? Yeah, okay. All right. So Saks Parente, debut, big winner, kind of a drop. And always keeping tabs on golf and public markets after the big
HE's resumed.
Take up of the sport over the last
down 2%.
All right, let's do some trading. Scott Bauer joins the CEO of Prosper Trading Academy. Scott, you spend as much on golf as you do on skis?
Not so far off, actually. However, I've seen you putt before. I don't think it matters if you have a Saks Parente or from a miniature golf
or a stick from the tree. All right. Okay, enough making fun of my golf game. What are you trading, Scott? Give us something to trade here.
Well,
volume's crazy.
Today, we have been focusing on China for, it seems like, forever, right? And there's been just so much optimism coming out of China. Now, finally, the market is realizing that, okay, what
GNS
they've been maybe
new high, or breaking out of that bull flag at least.
Several months,
almost green. That's awesome.
Pent-up demand and future demand maybe isn't so crystal clear here. That's why we're seeing this
23% from bottom to top. Well done.
This is way more of a story.
Well done, you dip buyers.
This pullback here of lack of demand instead of
10 minutes Fugazi coming up.
And we all know that we're exporting more than we ever have. We're also producing. The U.S. is producing more than we ever have. We're back up to those 2020 levels here. But to me, this is a very much needed pullback. 81, 82 to me was just so overpriced. We've talked about this. If you're going to trade in the oil markets, you've got to use your stops here. I really think that we could see 77, 76 in the next week or so.
And the fact that we're dropping, even with some decent inventory draw data, to your point, the production data too, I guess the market thinks we just won't be able to sustain the level of production coming out?
Yeah, absolutely. Last week we saw a build. This week we saw the 6 million draw. And there's expectations
Got a good trade, Christopher?
that there is going to be more production and a build.
Put somewhere in there.
So if you're following the oil market just based on what China does, that's a tough way to trade, because we honestly don't know what that real data is. But I think that this rally, I was way overdone to the upside. 75, 76, that's my area. And then I'll consider what to do here. But that's really the equilibrium to me in the marketplace right now.
To broaden this conversation out a little bit, Scott, to the macro discussion at hand, yields going up, dollar going up, I was curious to see how the crude moves might fit into some of those trajectories with yields and the dollar higher. But even with crude down today, bonds still selling off.
Oh, HE's dumping. This thing's crazy.
What's required
any more news?
A bond sell-off at this point?
maybe the
I
market
don't see any
is
specific
finally
news, but
catching up
Hawaii is
to
going
what the
down.
bond market has been flashing over the last several months. So many of us, myself included, have really
What happens to XDB? I think it's tomorrow on it.
that there wasn't going to be a recession, that the bond market is wrong, and
Oh, GNS dip buy. Well done, Christopher.
here is a little bit of
Just
catch-up
be aware,
here.
the shareholder meeting's tomorrow at 8
This
a.m.
big continuation
Oh,
of
pre-market.
yields rising, bonds selling
Yep,
off,
23% if you bought that dip.
in the 10-year and on the longer end, and you're seeing that contraction of time, the 210.
What are you saying?
30. So, if we get a little bit more of this catch-up, to me, I think we're going to start seeing pause there as well. We're probably getting to that point. I know 425 on the 10 was a big psychological number, but we're getting to that point here where I think it's getting to be a little bit overdone.
10 minutes, Fugazi, here it is.
All right, there it is. Great conference, Scott. Appreciate it. Fun discussion and helpful to make those dots connected. Bonds and crude oil. When we come back, our Schwab team will join us to go into the bell. We'll see if stocks catch any bid, but it's generally been the opposite, mostly fading from the morning bounce.
AMC is green 2.5. Look at that. The options are not moving though. Top down 16.5. Barbecue down 9.5. G down 3. Hitting that 13.25. Got another support at 12.8. These are like 2008 prices, 2011. Seems like a good opportunity. See where it settles at though. So there's a lot of momentum to the downside. RSI's at 5 on the daily.
sideways, like a chip maker chart, SMH kind of going sideways, home builders kind of going sideways when you take it back a couple of weeks. But Kevin, I think the thing here that maybe is not nerve-wracking, but a little bit frustrating for investors is that it looks so much like last year. Bond sell-off, stock sell-off with them. Are there distinctions that separate this environment from that bear market last year still? Do we have a little buffer zone with the progress we made the last 10 months?
I mean, there are parts of it that are different. I think, last year, if you would have told somebody that, the 10-year would go to 4.25 and the max pullback in that period, that it spiked to that for the S&P would be, in the range of 3 to 4%, you probably wouldn't have had a lot of people believe you. So I do still think that, the theme of this less hostile relationship between bond yields and stock prices is holding. I think very much 2022 was the test of, can we handle the rapidity with which rates went higher? And then 2023 and beyond from here, assuming the Fed sticks to, the higher for longer goal, is how do we maintain at kind of higher rates? And, it's not a given that we just stay pinned to the 4 to 4.2 range on the 10-year. I think you very much have to consider kind of the trajectory for inflation and overall growth, and particularly where the Fed wants it to go. But yeah, I think for now, you're probably going to stay in this choppy range where, depending on why yields are rising and popping higher on any given day, that's going to be a significant driver of equity prices. But, as Randy was saying, I think a lot of it now is not just the rate story, but it's also the growth story, particularly for companies. If they have really solid earnings growth, but if they have been kind of generating that via aggressive cost cutting and you're not having the nice offset of revenue growth coming in, which for the most recent quarter, there's been no revenue growth, and in real terms, it's been negative, then I think that's a net negative for the market, and that's what we've been seeing over the past few weeks.
Are we going to see breadth skew back kind of asymmetrically again, Kevin? Because I know you did a lot of studies on breadth. You and Liz Ann talked to us a lot about breadth over the last 10 months, how it shifted when things started to get better. But when I think about NVIDIA next week, might we get a scenario where the market gets super lopsided again?
Well, it's gotten a little lopsided already. I mean, you just look at the spread between something like the energy sector and the tech sector, which are often, pitted against each other as the value play and the growth play, respectively. Energy's held up a lot better than tech. And you could argue for various reasons, tech got overextended from a valuation basis.
5-minute finger slap is here. I'm not going to wait it out.
Players in that space.
Didn't do,
been the laggard a little bit
just
this
did SPY
year,
today.
has taken a lot
By trades, I think.
to catch up. But I think within,
yeah,
if you're looking at
a lot of my
on a
longs
sector
have just been
basis,
getting wrecked, of course.
A sector like energy, for all
And my shorts haven't really started working yet, so Carvana's one of my shorts. It's down a little bit.
From softer oil price gains. Energy's screens
finished closing out a Tesla
among all the sectors from something like the standpoint of interest coverage.
Data Farm
so
is
a lot of those companies have actually grown in their fundamentals.
It's red right now, but
being able to handle
we're selling
higher
time,
rates,
so
not just the speed we've
be
gotten
patient.
to this level, but just
average down on some
that we've gotten to.
They look good,
and that's
but
still a benefit from kind of the 2021,
a lot of the charts look like they're
trades. So I'd keep that
not
in mind.
good yet. So
in addition to breadth statistics,
wait on
you also
that.
want to look at underlying
Oh,
fundamentals,
GNS. I guess we
what they're
did.
saying about the sector
Sell
itself.
GNS, buy GNS.
All right.
I sold GNS.
Randy, want to close out this comment by coming back to options for a sec. Looking at how traders maybe have shifted, do you see any
Actually higher than where I sold it, I think.
in the skews,
I don't remember when I sold this. I sold it yesterday, that's right.
Kind of
I might get back into this. Gotta see what happens tomorrow.
Not as much as you might
That,
expect.
pre-market
the VIX closed
meeting.
above 16 yesterday, probably will again today. This is only about the
EBET.
4th day since the June 1st
Potentially getting
debt
some
ceiling
on
deal
this.
that
I don't
that's
know.
happened. Prior to that, it had
Got the little
closed
head
above
and
16
shoulders
every single
there.
day since the beginning of the year, except for one. So that's kind of the
Might give
the
that
good or
some
bad
time.
threshold.
Volume
but
on
it's
this
not
thing
a
is
terrible
insane.
scenario.
1.1 billion
certainly from the
volume on
perspective of
EBET
the VIX
today.
long term. 16
Free
is
flow
not
is
a high
130
level.
million.
I mean, average is
That's
around 13. Or
crazy.
the common level of the VIX is around 13. The average is closer to 20. So
Green
it
on the
isn't
small
too
count
bad.
today.
What we do see in the put call ratios, the VIX ratios, which is where people are kind of used to hedge, are still pretty neutral. We have seen a bit of a shift to the bearish perspective on equity options, but
Here's
the
EBET's
thing to keep in
borrow
mind about that is
info.
that's generally a lot of retail activity. It tends to follow the market rather than lead it, and so that.
Rid of that. The borrow fees come down, but it started bouncing back up on the 8th. 84. 84%. The stock started bottoming. Where that borrow fee started going up. Seeing SPY flushing here into the close. And that's it. Thank you guys for your support. That was pretty interesting, that court hearing as well. Thank you guys for the likes. We've got 29 on the day. Thank you, Emperor, for the donut. Appreciate it, man. Very generous. Love you. Hope you guys have a good rest of your afternoon. See you on Discord. Thanks, Emperor. Thanks, Guts. Thanks, Poison. Thanks, Christopher. Good advice. Stay patient on it. Well done, Christopher. Absolutely, sir. Sold it from GNS at bot. Dang, dude. About the same cost basis today. How's that same cost base if you sold at 144? Oh, you're saying you bought 10,500 with the same amount of money? Yes, this is the way. So you basically just got 2,500 free shares. Nice. All right, take you up. Thanks, man. Have a good evening. I see, Poison. Yeah, that's fun to do. Gotta be careful though. Like I said, going on tomorrow with it. You have after hours too. I mean, could do stuff in after hours still, I guess, if you want to keep looking at it or set alerts or something. Keep an eye on eBet. I'm gonna try, I guess. I'd like to not look at stuff after hours, but setting alerts. This thing starts to move. Yeah. Anyways, thanks guys. Appreciate the support today. We'll see you on Discord.